I won't slow down, building my empire in this buzzing town, casting my vision on the silver screen, my funded life, a vivid sheen, my funded futures light the way.
Good morning, traders. Welcome to MyFunded Futures and MyFunded TV. I am Terry Trades 100, and we have our expert traders, Bull, Barbie, and Nick does futures. Good morning, traders. How was your weekend?
Good.
It was great. I had a football start, and my Chargers beat the Chiefs, like I said they would, and yeah, it was good. Had a lot of fun.
How did
I
your
didn't do anything yesterday. I picked up my dogs, came back home, and sat on the couch for 12 hours.
Yeah, nice. How did your parlay go?
I did not hit the parlay, but I think I went 7-4 on the weekend. So, barely above profitable. But hey, it's just base hits, right? I had some bad losses, man. I had some bad losses. I had some big favorites that just lost. They were favored by 18 points. And then another one was favored by, I think, 3, and they just got blown out. I'm like, what in the world? So other than that, now I'm back in here to gamble some more, right?
Let's go. Barbie, how was your full port Terry? How was your weekend, Barbie?
It was good. How was yours?
It was good. I did go and watch a football game at a new sports bar that I had never been to before. So that was fun. Had some steak nachos, delicious. And it was cool to see all the different games up. And they actually played the volume for different games. So that was fun. Who'd like to go first, Nick or Barbie? Let's take a look at the charts.
Yeah, I'll go first. This is the best time of the year, that for me at least, because I have nothing to do really on the weekends, besides just the normal, hang out with family and stuff like that. But it's just I feel like it's so much easier to go out when football's on because you can go to a restaurant, you can go to do whatever, and the game's just about always on, because that's people kind of plan the whole weekend around it. So, but yeah, let's see here. Now, for this week, we don't have any news Monday, Tuesday, I believe. It's just Wednesday through Friday. We have PPI Wednesday, CPI on Thursday, and then U of M on Friday. So, with that being said, I'll probably look for price, honestly. People aren't going to want to hear this. I wouldn't be surprised if we just kind of consolidated in here, especially today. And heading into CPI. The closer we get to CPI, the lower probability price becomes. And then once that news comes out, I feel like you can kind of see what the market wants to do. So if I would look at my hourly charts and everything, since the open, really, we haven't really moved too much. So I could see us going down to here today. Testing into this 1 hour fair value gap in here again. I don't really have much of a plan right now. I like to see how we kind of print, especially with the information given to us since the open. We're still kind of hanging out inside this Friday's range, which is a very, very big range. So I want to see, are we going to either come in here and then move away, or are we going to just respect this 1 hour fair value gap, or 4 hour, and then just go lower? I think it's going to be a little bit of both. I think we're just going to be running highs and lows, maybe until Wednesday, because CPI is a big one. But other than that, I don't really have too much. Let me go out to the 4 hour chart. I think the 4 hours roughly around the same. Yeah. Kind of bouncing between bearish and bullish gaps. Let me check out gold here for the people. This thing has just been ripping lately. If you guys have questions, feel free to put that in the chat. On Thursday, we saw it come into that gap that it made from Tuesday and moved away from it. We're at all-time highs on this puppy. So how I like to trade all-time highs is using standard deviations, right? We have a consolidation, a clear consolidation, right? Now from the low, so from the low, the move that went higher and the high from this consolidation, you can either use the body or the wick, it don't matter. This is the only thing I look to target, right? You can use these standard deviations as targets, and then just kind of pretend like there's a high up here that price is reaching for. The one thing I see people do a lot of when they're trading at all-time highs is they just keep they think pullbacks are so what's the word, rare at that time. Man, what happens is usually they come when you least expect it, and they usually come like they did on NASDAQ on Friday, where you just like shoot down all of a sudden. But just pay attention to see how like mark it off. That's what I used to do when we were trading all-time highs a good bit. You know, okay, 1 hour gap here, or 4 hour gap here. Sorry. Okay, cool. The next one's right here, so maybe wait till we get that in here. Maybe get a move in here, and then I'll look to play the move back to whatever high it gets put in here. That's the only way you can really do it. I don't really trade the reversals too much at all-time highs unless we really start seeing some sell-off on the daily. But this is how I would do it. You know, just wait. And if you don't get a trade, you know, move on to a different asset. So yeah, the cute guy wearing the yellow glasses, yeah, that's me.
Thank you, Nick.
Mm-hmm.
Good
And
morning,
there's
Tim Voltron in the house. Oh, sorry, Nick.
No, there's no specific strategy that I use for gold only. I just wait till like 9:30. It's the same as my indices strategy, but this is the only real point of interest that I have marked off. Everything else on the hourly kind of looks like wicks, and I would honestly like for us to run this trend line here, and then come lower into this 4 hour gap before making a move higher. So that's just me. But yeah, that's what I'll be watching.
Thank you, Nick.
Mm-hmm.
Barbie, what are your thoughts?
Well, I think Nick covered how we have data at the end of the week, but not today or tomorrow. So I'm definitely keeping that in mind when we're looking for a breakout trade, something that's going to move a lot of distance. We want a catalyst, and without a catalyst, I mean, the data points aren't the only catalyst. We could have a Trump tweet or a Russia bomb, who knows? But, you know, we're looking for some sort of catalyst to push us through important key levels in the market. And right now, the ones that are planned are later in the week. But what I'm kind of watching is we have kind of two areas of consolidation, and we have this. I got to turn my magnet off for a second, but come on. So it's really this area from overnight, and then we had some, you know, overnight the what was it, Friday last. So we kind of have these kind of zones that I'm looking at. So that kind of puts price into this single print area here. Basically, I'm looking, this is an incomplete auction here. We have a big old candle that tested down, and we haven't retested inside of that at all. So I think it's pretty decently likely, even though we don't have a lot of catalysts, that price can kind of test up into this area. I don't know if we're going to be able to get the power to break through it. That's what I'm not sure about on days like today when we don't have any of the big catalysts. So it could just be that it gets knocked right back down into that range. On the other side, we kind of got another zone down here that you can see. So that's kind of the limit if we, for some reason, drop lower. I lost my little tool. But that would kind of be the same move where we're just kind of looking to stay inside of mostly that candle from last week. And that can make it a little bit more boring, but I do have some key levels that I was kind of watching. The first one is kind of, I was watching 87.75 last week. I'm kind of still watching that 85 area. It could be that if we test lower, we don't get into this full consolidation down there and just kind of retest that level there. We also have 6,500, and we've been really kind of glued to that right now. So the 6,500 level, I'm thinking, can be pretty important. And then we had the previous all-time high from last week before we broke it was there around 65.23. So I'm watching for that to be a key level. And then, of course, we have this new all-time high up here at 41.75. So those are kind of the key levels nearest to the price we're at right now. I would also kind of watch this, well, the magnet drag that up for me again because I turned it on. I'm having magnet issues. But it would be the 64.60-ish level down here would be kind of that low that I would not want to exceed if we're going to stay on this current path. If you zoom out, you can see that would also be a trend line break. There's a trend line holding last week's price. So getting below that 64.60 would change all of that. So this is kind of the main area that I'm looking for price to trade in today. If we get outside of that, it can get a little bit different, and then we'd be looking at more of a breakout or breakdown type scenario. But yeah, that's kind of what I'm looking at right now. I like
Thank
to
you,
kind of see how
Barbie.
Mondays will open up before I commit to any serious plan, but it is looking pretty likely to stay inside of Fridays.
All right, possible inside day. What are you guys thinking, traders? Are you thinking long today, short today, or no trades? Jan says, my prediction for today is that the market will either go up or down.
No. You're not going to ignore that comment from Zeromi here. Who's the baddie in the black hoodie?
Who?
Someone said, who's the baddie in the black hoodie? And you just ignored it.
Who's the baddie in the black hoodie? Who's wearing a hoodie? I don't see any hoodies.
Oh. I think he thinks that you're wearing the black hoodie as well.
Oh, thank you. Oh, no hoodie. What do you think for today? Up or down? Can I hit both? I think maybe a gap fill since it is Monday. No news. Maybe we get a gap fill.
Yeah, I think China did have Barbie sanctioned. Yeah, and I don't know why she's having magnet issues. Let's see. Yeah, I do. In fact, do futures.
Magnus is wearing a black hoodie. That does count.
Oh, okay. Well, yeah, it was definitely. Sorry, Terry. They meant Magnus then.
It wasn't me. It was Magnus.
Yeah. Yeah, so we got CPI this week. I was looking at that Fed Watch tool last night. Barbie, I don't know if you can pull that up. It is the numbers on that the next 3 months have just shot through the roof. They got really, really high. It's kind of insane. So, oh wow, went up ever since I looked at it.
So yeah, I want to point out that normally there's another one over here for the current rate. It's gone. The one for the current rate is gone.
Wow.
Yeah, and if you go to October and December,
so here's current rate.
It's actually even more surprising.
So the current rate is not on here still. Okay, so this is one rate drop. This is a second rate drop on this big guy here. Then we can look in December. That's one rate drop. That's two. That's three. So somebody's betting on 3 rate cuts still this year. Well, that was on the table earlier, but we kind of got over that.
Huh.
Guess it's back.
Yeah.
It's back. Oh, Voltron says they just pulled the orders. Interesting. So Voltron
the order flow's been pretty strong in the past hour or so. So I've been watching that too.
Yeah, Voltron was on our show and showed us a little bit about footprint charts, which Barbie also trades.
It's one of the ways that you can watch the order flow. There's several different ways, but it's one that he and I both like.
Nice.
There you go. He's already printing this morning.
Go Voltron.
Having trouble load up my Ninja Trader here. Anyone else have a problem with Ninja Trader this morning? Oh, I think I got it. Never mind. Can't trade if I can't get on the charts, right? Let's see. Yeah. Well, I do remember them talking about back in May or whatever that they expect three rate cuts are coming. Or they said they're on the table for this year. I remember them saying that. So
Then they had pulled it back.
did they really?
Yeah. So then we're looking at maybe one.
Well, I think what has a lot to do with that now is after last week's NFP numbers. You know what I mean? Because you want the job numbers to not be great in order to cut rates, right? Which is kind of what I think Trump's trying to do. But people just think he's just going to scream at Jerome Powell, and Jerome Powell's going to do whatever he wants to do.
Everyone it's the same as everything else. They just want the drama.
Mm-hmm.
Whether it's there or not, everyone's got to create drama.
Yep. Let's see. MES, MNQ, MGC. Cool. All right. I'm ready to go. I'm ready to make some money this morning. We got 8 minutes till market open. Terry, we're closing in on a couple weeks out. How are you feeling for the little 25K? You picked out the Rolex yet? Like what are we?
Not yet. I need to put together a vision board of all the different ways I can spend the money. No, I am looking for outfits. That is my mission. So yesterday I went and found one new top, a possible second top. That's my challenge this next week. And then also just like trying to be a better trader, right? Less trades. I did have a day that I went on tilt, and I went back and I looked at like my dashboard on MyFundedFutures. And which, by the way, I love our dashboard. It looks so good. I looked at it and it was like, I was like red in the account by about like $300, a 50K core funded. But the number of trades that I took that day, you guys, it was over like 100. I was just like, oh my God, like so much work for a negative $300. I was tilted that day. Yeah. So it wasn't good. But I think by looking at those stats, by reviewing your day, it does force you to see the good, the bad, the ugly, right? Like, it's like, I think there's a tendency, I know I experience it where if you have a bad day, you just don't even want to look at it. You're like, oh, it's so ugly, I don't want to look at it. But that's probably the most important time to look at it. And it's like facing the ugly music, right? Like, oh my God, like that was terrible. Yeah, so I'm kind of just gearing up for it, working on good trading, learning from you guys, of course. And I did find out that it will be head to head with Rena against me. We will
So
be
he has to
competing.
pay someone at least
25,000. Yeah.
There you go.
Exactly. But you never know. Maybe I'll buy a Powerball ticket and I'll win like over $2 billion whenever that next drawing is.
Well, I think the winner was in Texas, down in Barbie country.
Oh, someone already won. Barbie. There will be signs.
I think there's already signs for Barbie, but whatever.
More signs.
Yeah. Wow, 100 trades. I'm not even getting 100 trades. That's what times did you trade that day?
Oh God, I must have traded every session, and it is, to be fair, every time you scale in, you scale out, each one is counted as a separate trade. So if you're trading micros, let's say you scale in 10 micros, that's considered 10 different trades. But still, it was way too much. I was like, ooh, ugh.
Okay. So,
yeah, it was ugly.
So so technically, if you take 100 contracts, you consider that 100 trades.
If you exactly the dashboard does, yeah. If you're scaling in and out, like if you just put on 100 contracts at once, which you can't do, right? Like none of the accounts can you put on 100 contracts. Oh, actually, maybe the pro accounts you could with micros, but yeah, it would be considered all separate trades. Oh, I have exciting news to share with you guys. Let me pull it up. Very exciting. I think I have the right screen up. So you guys, we're growing our MyFundedFutures family, and we're growing our content and our YouTube channel. So Steven from SK Trading will be trading live on our show from 8 to 10 p.m. Eastern Standard Time starting tonight.
Oh, a little Asia stretch, Asia session. Dang! So now we got something to do at night, besides watch football.
Yes, exactly. For everyone that loves to trade Globex and the Asia session, make sure you tune in and turn on your notifications too, because when we go live, you'll get a little notification to help remind you to hop on and watch us.
Wow, that's pretty cool. Yeah, that's awesome. The bull, the bear, and the ugly. Okay, got it.
Yeah, we had Steven on earlier.
Yeah.
A few
he's
months
awesome.
ago.
Cool.
He's great. Really good trader. Incredible trader. So that will be a special treat for us every day,
Time
Monday
again?
through Friday, 8 p.m. to 10 p.m. Eastern Standard Time starting tonight.
So now Terry, she's just gonna be, like, what is it? My fun of TV and chilling, like,
Right? Clicking away.
yeah, clicking away.
Yeah. No, definitely. I will be stopping by and saying hi to Steven for sure. Let's give him a warm welcome tonight.
Yeah, for sure. I'll definitely pop in
I
there.
don't think he's ICT. I think he's got his own strategies.
Wait, someone said
Y'all
wait,
got to
what?
remember that a lot of these really like great, very best traders, they've developed their own strategies. They're they might have had influences from other people, but they're not going to say, "Oh, I trade this other guy's strategy." They're going to teach you about their own way that they look at the market.
Oh,
And that's-
Voltron's that is, yeah, ICT. I thought it was just some random. Be like, oh, come
yeah,
on.
he's trolling.
Yeah. Oh, come on, Voltron. Give me the ICT chant. ICT. I know you can type it out in chat, bro.
Yeah. So SK Trading, he has over 41 years of experience. GOAT.
Wow.
Yeah, I don't think he learned from old crazy Mike.
Well, you never know. You never know. He could have been one of the guys that took him into the van,
So the market's going to open in less than a minute.
There we go. There we go, Voltron.
Voltron's getting the ICT chant going.
Yeah, I want to see if we can bounce from, like, if we can go up from here. I just don't really see a very explosive move today happening. But that's
That's what I'm looking at too.
Mm-hmm.
I'm gonna be pretty careful. I'm just gonna watch and see what we do at these highs. This is what I like to do when we're still inside the Asia range, heading into the New York Open. I will. You'll see me a lot of times just mark off highs and lows from the previous sessions and just see what happens. I think I did that last week when I was expecting a consolidation day, and Tara was like, "I think I may go long here," and I'm like, "Man, I think he may get stop run, and then it may happen," and that it did. So, but I think she got back in and worked out. But yeah, so just to see what happens here. I want it to move higher. My TP got it on the longs. Let's go. I see coffee. Yeah, no, we're 600 away from 50K. Maybe we got something planned there. Bye, ding, 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 ding. I'm 30 seconds late.
They got it. I heard it.
Market is open.
Barbie, I don't see the lariat in there anymore. What happened to the lariat?
I had to use it. I didn't get it back put away.
see. Make sure you guys like the stream. I'm gonna drop to a 5-minute now and just kind of see what's printing here. So
Ooh,
ES going lower.
it is moving around.
See if we run for these. Why is my thing not popping up? Okay, there it is. See if we go for these London lows on ES. ES is weaker right now.
Oh, Jenny, you're trading on the paper account? That is a great way to stay out of trouble. We are learning to trade on paper. Currently up 300.
Yeah, we're opening up pretty slowly. That definitely leans into kind of that same thing Nick and I were talking about. The market doesn't have a lot of room to go anywhere until we get some reason to.
How about that big move down on Friday? I did not see that coming. That was huge.
Oh my gosh. Yeah.
I
It
really
was
didn't even see it. I was outside, but
it was a beautiful cascade down.
oh yeah, no, I caught some of that. Still some of that. I was looking at the charts this morning and like I don't remember it being that dramatic, but I guess it was.
Yeah, no, it was pretty big. As soon as it started happening, as soon as it starts bottoming out, people are like, "Oh man, this could be bad for indices. Like this could be the high of the month." I'm like, "Oh
That
my
was
God, not this
that was
again."
smaller than last Tuesday's candle. That's what I always have to point out. Like, look at the other days. It's not as dramatic as you think all the time.
Do you use that average, that ADR or whatever, like the 5 and the 3, or you just kind of like look at it? It's like the average daily range.
Oh, the ATR. I use ATR, but you can also just look at it. It's like I can look at Friday's candle and see that it's not that big. You just look at the other daily candles. There's a lot of bigger daily candles, even recently. So not that intimidating.
Also find it funny when usually when you have those big candles, it's on, and then you look at the economic calendar, they always kind of pair up with each other. Whereas like if you just look at the chart, like, oh, what happened? You know, that's usually why we wait for those days to kind of get out of the way. And then right before those big moves happen is what? Usually some consolidation, right? So I always find it funny when people go, oh, no. So
what was that impression again?
People always, I did not see this coming. I'll check out bonds real quick.
Even gold's slowing down right now for the open.
Ooh, NQ, I think just made a new high. Not by much. Bulls are in charge in this first 5 minutes. NQ is up by over 129 points. Ooh, it's pushing.
Oh, dang, Denny just went 300, 1,400, 1,700.
How many contracts, Denny?
Shh, on the sale. We may have some cooking. Maybe it's just in the pot, We just gotta, keep saucing it up. Yeah, let me cook, bro. Just 5 minute. I want to see what happens here. ES is kind of lagging behind. Also, look at the size of these candles, right? You see how it like lacks. You see how it lacks like displacement in here. Like there's not a whole lot of gaps. It's just kind of. Whereas like right at 9:30 open, we had a good move here. Let me go back to the hourly real quick. There's an SMT at the lows with 4 a.m. There's S&P at the lows. My thing is we have a big move down right here. So we have a big gap here that could be respected if price wants to go lower. We have one below us as well. And we kind of have indices kind of moving out of sync a little bit. Excuse me.
Will we
Wow,
go test
on.
the Friday's highs?
Could be.
Oh,
See, this is another example of what I like to call like a low probability day too, because who would have saw this coming, right? Let's just say we run for that Friday high, right? In the midst of, a massive sell-off on Friday, we have a gap below us. We don't really see like right at 9:30, like it just rips higher, right? People always think like low probability conditions are just like something like this, where it just chops around everything. I like to just see them as like when you don't see them coming. You guys notice like whenever we have CPI, I'm like, hey, like this is one of my favorite days to trade, and we usually catch a good move on that day because I just look at past data and I can see that I perform pretty well, and it's usually a good move too. Let's see. ES really hasn't moved though. That's what's kind of wild.
Market is still trying to feel out the vibes.
So when do you do that thing? Was it September what?
September 22nd.
Okay, so that's like that's 2 weeks from now.
Yeah. I got to get my booty in gear. I did hop in a short, you guys. It's about to hit TP 811.
Which NQ or ES? I don't know. You trade 100.
Oh,
so NQ.
on NQ. Yeah. I
like
hopped in it with a full size contract. Let's go. Yeah.
I like
it
that
hit.
a lot.
Thank you. That one I was watching like the price looking for a reversal. That worked.
Oh, by the way, I think T Trades is gonna come on in 2 weeks. By the way, I think like sometime the 20th. I think maybe while you're gone, he'll be on.
Oh shoot! I'm gonna miss it.
He's gonna come on like twice a month during our segment. So,
thank you, Nick, for making that happen. W for Nick, guys.
W for Terry. She needs it more. I want her to get that 25K.
Big party.
You have a 50% chance of getting it. That's what's crazy.
You think 50?
Yeah, I mean it's just you or the other person.
Anything can happen. Yeah, anything can happen depending on the market conditions that day. Hopefully the market just like tanks for me because I like to short.
Let's check the news calendar. The one thing I would do if I were you is check the news calendar. So that's 2 weeks from now.
Yeah.
Okay. There's no news Monday, but there's red folder every day that week except Monday and Wednesday. So you're gonna have volatility. Also, you need to go look at like those days in the past, right? Like in August, that same week, how did you trade, right? And like look at back test that. Like if for example, if I was doing that competition, I don't know how the rules are, and let's just say it fell on CPI week. And usually CPI and I believe PPI are in the same week, or there's another one after CPI. Those 2 days would probably be the only 2 days I'd trade. Whereas like I may get a lot of like pushback on that. Well, you're not taking a trade, you have like ICT. Was like I know that I can catch a solid trade on like PPI or CPI, and I can just like go heavy on it, right? So maybe go back and look at those days, right? See how you performed and what, you know, when did the move started to happen that you wanted to see.
Thanks, Nick. That's really good advice. What do you think about the idea of like watching her P&L? Not watching it like watching it, but like let's say she like trades conservatively. And then do I adjust my trading style? Yes or no, guys? Like if I want to win, do I
Well,
or
is it based off of I'm guessing you're all gonna get the same starting amount, right?
yeah, I think so.
And whoever makes the most in a week, I would probably just check it at the end of the day, because it's just like playing golf, right? Like you can't focus on it when you're playing in the middle of the round, but after the leaderboard at the end of the day, yeah, okay, going to Sunday, I know I need to, you know, I'm three strokes down. He's averaging about 4 under every single day. I need to shoot at least 7 under in order to, or I need to find 7 strokes in there somewhere, 7 shots. In order to beat. So it's kind of what you have to do. I mean, let's say you're down like 10,000 going to Friday, which maybe that's a lot. Maybe it's not a whole lot. Maybe you're just sizing. I guarantee you she's probably going to be playing a little bit more conservative and you're going to be trying to go heavy. So maybe just
pull back.
So.
Thanks, Nick. It is. It reminds me of like playing a golf tournament. And you're trying to kind of like win it, like just that thing. Jan says trading is you versus you.
Yeah,
Facts.
it's you versus. I wouldn't worry too much. Like especially from 9:30 to 4, I wouldn't worry about it at all.
Yeah, it's
gonna
gonna be a long
there's
day.
gonna be a lot of testosterone in that room. People screaming, yeah, you know what I mean? So it's gonna be gonna be hard. But I mean, maybe just put your headphones on like you do now and just like kind of lock in. You know?
Yeah. Thank you.
It's gonna be hard though, because it's gonna be it's your brain's gonna be all over the place.
Yeah.
It's I say man in the arena, right? Control the environment.
Barbie, are you in any trades?
I've been messing around with some stuff here and there. I'm working on just trying to buy the 6,500 area and then trail it. So sometimes it's been hitting, sometimes it's been stopping me out, but
yeah, so I think you have I think you should be pretty excited going to that trading competition. That seems like a lot of fun. I don't know if I could do it, just because
you could totally do it. Oh my god, you would dominate.
I think Nick wants to do it.
Nah, I don't know. I can't do all that stuff. I like my environment here. I got this 11 by 11 room. I trade best in there. It's a you versus you thing. I feel like so many people, especially on Twitter, try to make this like this egotistical. It's like, I'm a better trader because I trade the IFEG. I'm like, dude, like who cares, bro? Like,
yeah,
I'm trying to tell everybody. Like for me, it's more important to make. I mean, I trade for income, so to me, it's more important to trade for income than glory. So I mean, I know all these trading competitions are fun and everything, but at the end of the day, you gotta respect the reason that you're in the game in the first place.
Yeah, that's kind of how I see it too. As soon as you start to kind of feel that, like for example, if you're gonna have a tilt day, Terry, it's probably like, let's say you win the 25K and you trade really good. I would be so cautious going into the next week trading, because that's usually when it happens, right? Is when
100%. Yes, I've noticed that. Like when I am trading well, it's like it happens all the time. It just goes south so quickly. It's that overconfidence that can happen.
Yeah.
I've heard like of some traders say they significantly size down after like doing really well numerous days because they know it's coming. And so they'll size down expecting like just, maybe a tilt day or close to a tilt day or just like bad trading, but they're sized down. So now it's not going to hurt them as much. I have heard of that tip.
I had a good it's actually back in April. I had a good end of March into April, and then the tariff stuff hit, and then the volatility. It was like the first, I think it was like April 2nd or 3rd. I had like a tilt day. And what was so crazy about it is I almost got at the top of the market on that tariff, the Liberation Day or whatever, but I barely got stopped out. And I should, like 2 points. It went up 2 points past my stop and then just dumped. I would have made like a lot of money if it didn't stop me out. And I went on tilt throughout that session. I think it was only like 30 minutes or so. So that's the last time it's happened for me in like a big way. But I knew, okay, these conditions are different now. I'm like I said, you're still gonna have those days, like 2, 3, 4 years from now, but you're just gonna have to know when. After time elapsed, like the further along you get in this game, there's gonna be stuff in like 5 years that, oh, I've seen this before. Whereas like you're only like a year or less than a year in, you haven't seen all this stuff before, and so it may seem exciting, right? Oh, I need to scroll down with my chat here.
Jade Cap, I heard him say in one of his videos that like the tilt still happens. It's just you learn to do less and less of it as you become more experienced.
Yeah, no. 100%.
Mr. Smith, good morning. Mr. Smith says, I'm in a paper trading demo account. Champ. It is a great way to risk manage, though. You can revenge trade all you want, and it's not going to hurt you one bit. Trades like smoke says, I size down in second week every month.
Oops. A little Barbie on a replay there. Trying to retweet this thing from MyFundedFutures. Oh, go ahead. I'm so sorry if I cut you off there. I was trying to drag this window here. Let's close it out.
Let's see what happens with the 15-minute orb. What side will it get tagged on?
I saw Barbie put out a little IG reel over the weekend talking about the orb.
Yeah, that was a trade. Well, it was a trade we did on Thursday. And I was talking about it on my stream. We'd kind of looked at a confirmation that I was watching. So that shows, even though the trade lost, kind of a confirmation that I was looking at that gave me a hint that it wasn't going to be a great day for it.
Yeah. Nick's fighting his demons. Okay. Nick's talking to his inner demons. Two different people putting me talking about demons. What are we doing?
Why do you have so many demons?
I don't know. I have a whole lot of demons. Yeah. So if we kind of look at the market here, bonds yields are should be inversely correlated right now. Good. Gold. Looks like gold's not giving that pullback. Yeah, so indices right now, kind of looking a little choppy at the moment. One thing I like to do is just kind of mark off that weekly open. I forgot to do it last night, but
pushing higher. NQ is pushing higher now. Wanting to go even higher. Let's see what happens here. So the 15-minute orb, the high was 849 for the first 15 minutes. This last candle did go a little bit above it. Congrats, Raphael Trades. Gold took care of Raphael.
let's see.
Gold is breaking out.
Uh-huh. see. Yeah, no, we got some people coming on stream here throughout the month. You said he starts tonight every night from 8 to 10 o'clock at night. He does Asia streams, right?
Yes. We'll have to give him a very warm welcome. I saw Corey, the phone trader, is going to come back on our show too, and same with Tim Vesh, formerly known as Volatrades. They're going to come back on our morning show. Yeah, the Fuxery stream at night. Yes, at night, 8 to 10 Eastern Standard Time. SK Trading will be on with us live. Yay! Jan says I might hop on again soon as well. Please do. Voltron, if you're listening, you too.
One of these days we'll get Denny on.
Yes. Denny's such a good trader, guys. We have so many good traders on our team.
Nick, did you watch the Florida game? Oh, you're trying to say, dude, you hit. I had Florida minus 18 there, buddy. I was fading USF after watching them last week. I didn't think they looked that good against Boise State. Dude, Florida looked awful. Me and T's brother were thinking about going to the Florida-Texas game in a month from now. I'm like, I don't think I'm spending $500 for a ticket on that. It could be that could be a bloodbath. Or both of those teams could just not be as good as what we thought. Gold. Man, gold is ripping. Holy cow. What's the 15-minute look like?
I think that's so interesting that gold is at all-time highs, and same with the indexes. Yeah.
Yeah. Everything's just kind of on a ripper. Even bonds have been kind of shooting higher. I remember when we were down here, I think it was like late, like early May. People were like, oh, it's over here. We're gonna start. It's flipped. I think like the yields flipped or something as well, and we haven't seen these. I love the stats. I think Barbie can relate to these. We haven't seen these levels since 2007, 2008, and then everyone kind of
numbers.
Everyone already knows
the best numbers. We've never seen numbers like this before.
Never seen numbers like this before, and then like it hits, and then it's already back.
Can't beat these numbers.
Nick, how would you rate the 1-minute breaker on gold off the 15-minute fair value gap? Here, let me check that out for you.
Barbie, I love it when you do that.
Do what?
Her impressions of Trump.
Oh, her impressions of Trump?
So good.
Oh, yeah, hers her. There's a guy out there who does some on Instagram or whatever. I've seen he does some really good ones. What was he? What's the main thing he says? He says, I like how he describes someone. He's like, very good guy, great guy, actually. My friend. No, it's another. He's like some blonde kid, and he always dresses up. He's the one that went up to. He pulled up some famous actor's house, and the dude wanted to punch him in the face. So 15-minute gap here. It's okay. It's okay. I don't like. It was right at 9:30. That was the one good thing about it. Not too bad. I don't like. I would have liked to actually see another run lower here. And then solid displacement up. Go look at my trade from Thursday, I believe, on my Twitter. That's kind of what I like to see. I like the 1 minute to be crystal clean. I want to take it because it's so much. You can get so lost on that time frame.
Oh, NQ is pushing higher. It's looking like it wants to go test Friday's highs. Nick, speaking of a crystal clean on the 1 minute, I saw that you posted on X that you're going to try and pass some like evals during the CPI news on your stream.
Yeah. So I try to do that for CPI and NFP. Oh, Alex Baldwin. Type in Trump impersonator Alex Baldwin. Man, that was good. But yeah, no, we try to pass them on CPI NFP.
On Wednesday? Wednesday, yeah. CPI Wednesday.
No, it's Thursday, right?
Thursday? I thought Wednesday. Is it Thursday?
It's Thursday this week.
CPI should be
Okay.
Thursday.
Thursday. It'll be fun to watch you. I saw that. I was like, ooh, that'll be fun.
Yeah, it's always I always do it on my free Discord. I only do it for 10, 15 minutes, 8:15 to 8:30, 8:35.
Pass or smash?
Pass or smash. If Nick uttered a low word one more time, people will beat him. Okay. I've been called a demon. I've been called everything on this channel. It's just kind of at this point.
A goat. Barbie, how's the 15-minute orb going? It must be good. Market's pumping.
Should be. The NASDAQ one is long. The ES one is not. So waiting on that.
Go, go, go. I want to see a win.
Go.
Orb is cooking, Ezra says. The orb is very sexy. It's a very sexy trade. Lots of people are getting into the orb. I mean, they've always been into the orb, but like I feel like there's this renewed energy with it. The sexy orb. Who else trades the orb? Anyone else? Yeah, it is tricky this Monday. Barbie Bull.
Barbie Bull. I wonder if that's Barbie's burner there. I wonder if we could look.
Barbie's Bull.
Barbie's
you catching
Bull.
that? What would Barbie possibly do with a bull? I think that's what we're getting at there.
Oh, Mr. Smith trades the orc. I don't know what the orc is.
That's a good one. Great guy. Never met him, but great guy. 5-minute pre-market orb. Only on gap names. Yeah, that's probably Barbie's burner. If we could go back and look at all the message history, it probably sends in here. It's like, great trade, Barbie. You're the best. It's probably all it says. I hate you, Nick. It's probably what it says as well. Man, kind of ugly here on ES. I'm one of those people too. Is whenever what's the word? Whenever I kind of see like a range bound day, ES is the one that always tells me first, right? Mm-hmm. But then as soon as NQ starts to follow what ES is doing in terms of chop, I'm like, oh, yep, I'm done, right? Or I'm never even start. That's one thing I like to look at too. Because look at this range here on ES so far. 6509, 11 points. NQ looks a little bit better. But yeah, so pay attention to see what ES does on like 5-minute charts right around like 9:30 open. If it doesn't move much, then watch NQ. If NQ is not moving, just wait because nothing else to do. Can I get a summary of the orb strategy? Just go to Barbie's YouTube.
Yeah.
She's got the best video on YouTube.
A whole playlist, guys. Oh, congratulations. Quick, before you head out, Nick, Carefree Panda just passed the core account.
Oh, wow. Good stuff.
Congrats.
Stuff. Well, I'll be in here tonight. I'm going to pop in there for right before Monday Night Football comes on for about 20 minutes and see how Steven trades or however whatever.
SP Trading.
Yeah, see how he does in Asia. So I'll see you guys back here tomorrow.
Sounds good. Thanks, Nick. We'll see you soon. Bye.
So y'all keep talking about the market being so pumpy. Are y'all not paying any attention to ES? None? Y'all ignoring this guy? where the volume is. We got a choppy day here.
Hmm.
If US starts walking up, then we could get some more excitement. But I will remind y'all, when you get too excited, if you're getting too excited, look at the other guy, see if it's excited too. Because I'm not as actually high confidence as everybody else is sounding on the orb, but we'll see. We take it to see if it works. So we'll see if it works.
Jan says the only thing ES is pumping right now is commission fees.
Yeah, this is choppy right now.
Blue kind of day. Drop your questions for Barbie, guys.
What's up, Jake?
Alai says, I like choppy markets. Yeah, I think depending on your strategy, like range traders love choppy markets.
The thing is, you gotta kind of wait for that range to settle. We're not totally there yet.
Raphael Trade says, Barbie, you were right about showing up every day. It doesn't matter about whether or not there's red folder news.
Yeah, I've been through. I mean, I went through that with my own personal stuff, and we've had other, trading leaders through my group too. And I would get really frustrated with, I'm not trading today because there's news. I'm like, buddy, there's news like constantly. It's like, well, but there's news tomorrow too. I'm like, so you're not trading tomorrow? I was like, well, maybe, but like, well, what is it? Like, are you trading news or not? But so if you like breakouts are fun. Breaking up, breaking down, both that's the fun, right? It's a little bit more fun. We're like, oh, gross, it's a range trade. But if we want a breakout trade, we need a catalyst, and news is a great catalyst. That's the way I look at it. We can always find an excuse not to trade. I went through that for a lot of my life because my family told me that it's too risky. I'm going to lose my ass, whatever. There's a lot of reasons to not trade the market, but there's a lot of reasons to not do a lot of things. And, if we let those kind of reasons stop us, we're not ever going to get the big things done.
Mm-hmm. Raphael Trade says, I'm aiming for less points now, so even with a slow market, I can still bag up. Yeah, it sounds
That's
like
an adjustment you have to make too.
Mhm.
We get into slower markets and faster markets, and that's why I'm always telling everybody, look at the daily, look at the hourly, see how much we're actually moving, so what you can actually expect. We lose sight of how big the candles can actually be or should be when
Mhm.
we're all zoomed in on the lower time frames. Big boy, you're asking about New York. I don't know anything about New York. You got to keep in mind how big the US is too. If I got in the car and I drove to New York right now and I didn't stop, I think it would be like 3 days before I got there. I
It's
don't know.
huge.
I always think that's funny when people are like, "Oh, Americans don't travel enough." Like, we could put your whole continent inside of our country, so chill.
Yeah, so much to see across the US. It's huge. Texas alone is huge, just like one state.
You guys think this is crazy. Y'all think that I'm chill when I trade and then I have road rage when I drive. That makes no sense. You gotta be chill all the time. You wanna be chill when you're trading, practice being chill when you drive. Practice being chill when your kids are being dipshits. All of that helps. I'm always telling y'all, it's like you're not just improving your trading, you're improving your life because you're developing discipline and all this other stuff that you need.
Yeah, a bishek is practicing discipline, sitting on your hands. It's that expression of wherever you go, there you are. So if you're going to be wild and erratic outside of trading, and then in trading, same thing. We can't escape ourselves.
I think a lot of people think that once you make the money that it is that you want to earn, whether you want to be a millionaire or a multimillionaire, whatever it is, whatever your goal is, you think that things are going to change then and things are going to be easier, but you're still going to be stuck with yourself. You're still bringing yourself into that. So if you still freak out about little things and can't stay calm, you're still going to have those same problems. And if you have a hard time managing $100, you're going to have a hard time managing $100 million. That's the way that works. So in the journey of reaching your goals, you should always be improving yourself so that you can, ultimately you're trying to become the best version of yourself. So you've got to make all these little incremental little upgrades while you're doing that. You say you want trouble managing that 100 million, but if you're going to cry right now because you lost $500 in a prop account, do you think you would not cry if you lost $500,000? Even if you're a millionaire? It still stings, you know?
Mm. Oh, Claudio says, I won a 150K account, but the sizing on it makes it really hard to get to 9K in profit.
That is the challenge. It's a challenge. It's a trading
Mhm.
challenge. Y'all enter these, you buy some of these accounts sometimes thinking, oh yeah, I'm just going to get the big one. It is a challenge, treated as such.
The orb is trying to work its magic. Let's go. It's pushing.
Oh, Pi, I like that. It's funny that ChatGPT gave you that. The market pays me when I trade well, not when I want money. Yeah. So, you want to learn how to treat the market like an ATM, but it still might not be instant. It's like, okay, well, I want to buy a new Porsche this week, and I'm about $10,000 short. I don't have to get it right this second. The market can still be my ATM. I can wait until the market gives me an A+ setup to try and get my 10,000 for that I need to buy that Porsche this weekend. So that's what you got to look at. It's not every single second you're demanding it. You're waiting for it to give you that opportunity to be the ATM.
Denny says the market was my ATM for this upcoming weekend. Nice.
Well, Duddy has worked on very carefully finding the times to get in and out of the market so he doesn't end up holding some bags he's got to figure out what to do with and that sort of thing. Whenever I see those questions, because I see them, sometimes I get emailed, sometimes it'll be in our chat. It's like, what do I do with this position? And it's like, well, if it's hurting you and you don't know what to do, why are you in it? And if you don't know why you're in it, why are you still in it? Get out, And I know that sucks when you're down, you want somebody to help you and just tell you, oh, the market's going to go up, the market's going to go down. Nobody totally knows, and we don't necessarily know why you entered that trade. So if you don't, that's the problem I'm saying. if you're going to enter a trade, it needs to be on a different strategy. I get that asked all the time. What's your strategy? Well, my strategy is to deploy, a series of hand-picked little entries at levels. And so when I don't have that, then I don't have a trade, and that cuts way, way down on these losses. There's this idea that if you enter the market, there's a 50-50 chance, right? Because you're going to go long or short. So there's a 50-50 chance that you're going to make money. And that's false, because it's less than 50-50. You have to, you're wanting the market to get to a certain spot to pay you before it goes the other way. And that's a different scenario. So when you add that before X happens, all of a sudden you're way less than a 50-50. And that's why you can't just come to the market and learn a few little chart things and go on with your life. It doesn't work that way. I mean, you really have to apply thought process and strategy, and not just, oh, this looks good right here. I think we're vibing on this. I'll do it. This is another good point. Somebody was saying, oh, you can both make money. That just reminded me of something else, though. I have this friend of mine that's like convinced that every single time that I make money in the market, I'm sucking it out of some poor dude's pocket. But that's not actually the way the market works. Everyone's got their own entries and exits, and you're not going head to head with somebody. I'm just because I'm buying something from somebody doesn't mean that he's at a loss. He could be at a profit. So we're all operating different strategies on different time frames and things. And just because one person loses doesn't mean that another person wins, and vice versa. We're actually more than likely, our orders, especially in the futures market, are going up against some bigger players a lot of the times too.
Joshua says, exactly. I hate the zero sum attitude. It's totally not true.
It's another thing that y'all have to realize. When you're looking at somebody else and saying they have what I want, that doesn't mean that you can't have it. Like, everybody can have it. There's not a finite amount of money in the world. It's literally infinite. It's something that we've created, and we will continue to create more because that's what people do. So there's not a finite amount of wealth in the world. And the whole reason or the whole way that you create wealth is either by creating value or having a special skill. So that's what we're working on here. We're bringing value to you here, right? So that's a value that I bring and am rewarded for. And then I have knowledge that I can apply to the market and get rewarded for that too. That's that's the transaction. It's not Steve made money and I want some of it, so I'm going to take some of Steve's money. We don't have to take Steve's money. Steve can keep his money. We're going to get our own. There really is an infinite source. There's not a piggy bank that we're all fighting for our piece of. There's a lot of, everyone always is just feeling so competitive and everything, especially in this space. I feel I think there's this attitude. It's like, if I make money, that means ICT's not. And if ICT makes money, that means I'm not. That's not the way it works. We can all make money or lose money.
All make money or lose money. Yeah, it's like that scarcity mindset versus the abundance mindset.
I want to know how long it would take me to get to New York by horse. No. Why would I go to New York, first of all? That's how many invitations to like Miami have I had this year? No, bro. I'm good. It's like, why do I want to go there?
Tory says there's an infinite amount of money in the Federal Reserve. Yes, they can print
It does
money.
come from somewhere, but guys, it doesn't come from Steve. These are all imaginary numbers made up. Do you think that there were trillions of dollars in the world 2,000 years ago? No, we still had money, or there weren't $2 trillion of it. Trust me, there's an infinite supply of money. You are not up against Steve for it. Steve's coming to mind because we had this bird all week. This bird moved onto our porch last week, and we just call him Screamer Steve because he just sits on the porch and screams all day.
Oh, no.
The cats will go out there and try to catch him. He doesn't care. He just screams. So I blame Steve.
Poor Steve.
Steve's doing just fine though. That's why, I mean, if you went to I had a goal setting live at the beginning of the month, and that was the whole thing is, for me, it's about staying in my own lane and focusing on my own game. That's where my money is. My money is not in Steve's trades. It's not in anybody else's. It's in my own. I don't really care what everyone else is doing. I'm going to root for my friends. You know, I'm glad that we're all winning together. But that's part of why that comes so much easier, I think, is because I know that they're not taking money from me. Like, we're all kind of in the same trades anyway. They're not taking money from me. So you need to just go out and stay in your own lane and focus on your own. And I know, especially in this space, I get pressured all the time, and I get comments all the time. It's like, well, you're not as good as Trader Steve. And it's like, I don't care what Trader Steve is doing. I'm going to be totally honest with you. If he's doing something interesting, maybe I'll watch. But as far as like how much money he's earning, it doesn't matter to me. He's not paying my bills. I am. I need to work on what I'm bringing into my wallet and less about what everybody else is doing. And that helps a lot. I think because you're giving energy to other people's stuff, right? When you need your energy to stay in your own lane and improve your own stuff. So that's kind of my mission. It's not worry about what other people are doing, because I only have so much energy to spend on that. So I want to worry about what I'm doing.
Mm-hmm. Yeah, staying in our own lane and putting that energy that maybe some people use that energy to, I will say, like, when I've seen posts on X and there's tons of P&L and people are making thousands of dollars, they're taking out a 40K payout, it does kind of make you feel like you want to compare, but it's like catching that, like, oh, okay, I'm comparing right now, and it doesn't matter what this person's doing. Eli says, who is Trader Steve? Question mark, question mark. Yes, so it is focusing on my own game and where I'm at in my journey, because someone might have been trading for 40 years, right? Like, we can't compare. And exactly, it doesn't matter. Trader Steve isn't paying my bills.
You also don't know what somebody's working with, and that goes for their account size, but also the time and energy that they've put into really tailoring all of their strategies and everything. Because there's a lot of energy we put into learning and watching other people's strategies, but how much energy have you put into your own strategies? And that's what a lot of these guys that are having $40,000 days and things, they've put that work into their own strategies and not worrying about what Steve's doing. And they're worried about what their numbers are, what they're working with. I don't trade with my options account is large because I'm taking smaller positions, but I don't trade with the massive futures account. So I'm never going to make $1 million in one day, because it's not possible on my account. I know what's possible on my account, and it fits my plan, and it fits my risk profile and all of that. And I spent a lot of time tailoring that plan to my own personality and my strengths and weaknesses. And so it doesn't really matter if Steve's making $40,000 a day with his strategy, because I didn't spend all the time narrowing in on his and coming up with his numbers and the numbers that work for him. I focused on my own thing. And I think we can take inspiration and learn lessons from these people. But that's why, if you'll go to my channel, a lot of the lessons are showing you how I came up with these ideas. I'm not just saying, this is how you trade the orb. I've been very, very clear on every single video on the playlist. Like, I'll show you what I like, but here's some other ways that you can do it too. And go ahead and test those and make it your own, because that is where the big money is.
Mm. If your name is Steve, we do love you, Steves.
So Steve's my buddy. I'm gonna go hang out with Screamer Steve in a little bit too. We're chilling. Yeah, the continued videos that I'm working on for the orb too, that's going to be more how it is. It's like, here's my research. You guys can look over my shoulder and see my research. And I'm going to tell you what I'm doing with all this information so that you can tailor it to your own trading. That's always been my mission. And I think people come expecting to be spoon-fed because that's what a lot of other people do, but that's not how I learned. So that's not how I teach. Y'all thought I was real. You guys think I really have time to sit here and trade and chat and talk on multiple accounts? Where is my bull still here? That guy's been here for a while too. He's always here.
Barbie's bull.
Yeah, I found him.
CJ, leaving a runner for lower ranges. Nice short.
Is Tom trading with Steve? Yeah, that's the other thing too, is like any trades that I show up here, I'm not saying y'all take this trade. That's not my job. My job is to trade my own trades. And I'll let y'all look over my shoulder sometime and ask me questions about it. But you've got to make your own trades. If you want the big money, if you want that crazy equity curve, that is your own trades. That's not somebody else's trades. It doesn't, you can go find a million groups to pay all your money to every single month. But at the end of the day, what'll make the difference is making the trade your own.
Absolutely. And we don't know like what other trades streamers are taking outside, right? Like if I have a loss or a few losses or a few wins, like you don't know if I go off stream and go on tilt or I make like thousands of dollars. It's like unless you're copying someone one to one, like all their trades, like it's not, you're not going to end up in the same results.
Nobody
as someone
actually
else.
posts all their trades. Like that's literally impossible.
Yeah.
You have to think about if you were sitting there trading and then trying to post all that, would you actually get all that posted? Doesn't happen. Like no, but I mean, I don't even think that's what we're talking about though. It's more, it's not like just trying to take signals. Like I'm not trying to say that you can't perform well taking signals, but I'm trying to say if you want to be an amazing trader, a GOAT trader, that's not going to be signing up for a group and taking scraps, because that's kind of what that is.
There's no easy path as much as I wish there were. There are easier ones, right? Like you're sharing so much gold with us, Barbie, every day, Nick too, and our guests that come on share lots of gold with us too. So that does help. But and then there's this part of like we have to learn go through some of these things ourselves. And
That's the confidence you need. It's not like, oh, I'm confident in this trade. No. You need to be confident in your own actual trading from going through the work and the actual evaluation of doing all of that work yourself. It's not just like, oh, I need to feel confident and then my trades are going to be better. Like this really, I hope y'all are catching what I'm trying to drop here. Big stuff. The stuff that separates the 1% from the 99.
MyFundedFutures says, chat, since Abhishek is back, he is allowed to pick 5 winners whenever he wishes from chat. Oh, it's going fast. He is not doing it now, but it is entirely his decision. So be aware of that. He has some new powers. Let's go, Abhishek. So 5 people will win some free accounts today. And Abhishek will be picking the winners from chat. So get involved in
Suddenly
the
everyone's
community.
chatting.
Yeah. Throughout the day. We don't know when. It'll be a surprise.
Somebody keeps asking who Denny is. Y'all see Denny. He chats in here. Denny's behind the scenes helping run the show and happens to also be a kick-ass trader. There he is. That's our Denny.
Denny.
Very good at keeping those days green. We love that. MyFunded loves that. kept asking, like, who's Denny? Who's Denny? Like, what do you guys mean? Denny's everywhere. I'm pretty sure I'm Aunt Barbie to Denny's little third baby there.
The very first MyFundedFutures TV baby.
If you stay really patient and don't take a ton of trades, it ends up being a lot easier to keep those days green, by the way. It's when you start taking a ton of different trades, it gets a lot harder to keep those days green. If you're really, really patient and just wait for the best ones. I'm not trying to speak for Denny, but I think he would say something similar. And that it's just keeping discipline and sticking to the plan really helps those green days. Ooh, nice. Coming to Texas.
I know we need Denny on the show with us. Show us some skills. Soon, hopefully. Denny, we want you on the show. The orb trade is just doing its thing. It's not doing much right now. The 15-minute orb.
Indeed. That's why I wasn't super excited about it today, but every time I go to back test something, I'm like, oh, there's another rule I want to back test. So there's that. I have a very complicated spreadsheet going right now. Okay, we're gonna move. I am long in another account too. Let's try to show you that one. I have to switch over.
NQ is trying to
there.
push for those highs again.
I'm gonna go ahead and trail this up to break even. This one, I'm just hoping for something fun here. I'm probably gonna keep trailing that one. Let's see, that's a little counter trend, and then I've got this account. How's this guy going? When do you choose ES over NASDAQ? So I go to ES first. So it'd be like when I'm choosing NASDAQ over ES, would be a little bit more correct. But if I'm looking for the same kind of move, and let me take this off for a second. Check this out. If I'm looking for the same kind of move, and I'll show you why ES is a better choice for me at this moment. If I'm looking for a long, and I'm looking for holding kind of the 6,500 area, I did front run that a little bit because I'm at 64.99 something. But ES has made a lower move, so it has more meat on the bone, more potential to its high than NASDAQ does. I'm in the NASDAQ orb yet. The ES orb hasn't hit yet because it would be way up here at this high since we weren't synced up super well this morning. So that's why I did that one. Let me go back over to this trade. I have to make sure I get on the right account and then the right asset. So that's my first trade. I'm just going for that high there. And then the next one, I was going for, I might actually adjust this slightly. No, I like where that is. I was going for the hourly body that we had before we opened on Friday. So it's not quite a low, but it's kind of a consolidation area. So we'll see if it pushes.
Go, go, go.
So the NASDAQ one, I'll trail when it gets up to 88, 87 area.
Barbie, last minute thoughts that you'd like to leave us with before we head out for the day?
Well, we covered a lot, but I'll kind of go back on that a little bit. I would encourage all of you, I know you're learning everything from all of these different traders. Really try to think about which pieces you're going to take and apply to yourself, and then work on your own strategies to create your own thing. You don't have to trade, you can make up your own name for it too. So work on your own trading and your own everything here, and see if that helps kind of turn some of this stuff around for you if you need that sort of thing.
Thank you, Barbie. Just a reminder, tonight at 8 to 10 p.m. Eastern Standard Time, we will have SK Trading on, streaming live from our channel. So make sure you tune in, hit subscribe, hit notifications to help remind you. And I will be stopping by to say hello, and let's give SK Trading a warm welcome tonight. And up next is Ash. Ash is in the house. Welcome, Ash, to the show. Bye, guys.
Hey, good morning, everyone. Good morning or good day, depending on where you're from. Welcome back to another live stream. Happy Monday. How's everybody doing so far? How did everybody's weekend go? It's a great time to touch some grass, reset, recharge, do something good for the soul. That way we could be ready for business this week. So, what did you guys do this weekend? Anybody do anything fun this weekend? Perfect time to just reset and recharge. Got to remember that family and health are the #1 priorities at all times. I understand that we are always trying to, get 1% better. We're always trying to develop our business, but we should remember that, family and health are the #1 priorities at all times. So, hopefully everybody had a nice weekend. Hopefully everybody got to take some time to touch some grass. Going to just take a moment to say hi to the community and welcome everybody into my stream, and then we'll get into some information here. So let's see who we have here today. All righty, who do we have here today? Good morning, Jenny. Good morning, Content Hunter. Good morning, Good Guy. Good morning, MM. Good morning, Shen. Bilo, good morning. Jay Booz, good morning. Full Port Nico, good morning. Rocky Mountain Trader, good morning. Pi, good morning. Luck, good morning. Hello, hello, hello. Trader Slayer, good morning. MG Wall Street, good morning. Abhishek, good morning. Wyatt, good morning. Sharma, good morning. Rain, good morning. Raphael Trades, good morning. Thiago, good morning. Nicholas, good morning. #1, good morning. TT Trading, good morning. How's everyone doing today? How's everybody's week starting off so far? K Futures, good morning. No Luck, Pure Skill, what's up? Levi, what's up? LG, good morning. Trade Likes Smoke, good morning. JJ, good morning. Zentaki, good morning. John, good morning. Vishal, good morning. Greek, good morning. Prady, good morning. Hello, hello, hello. Welcome back to another week, another chance to gain more conviction in our business. Let's continue to keep relentlessly working and learning every single week. Let's continue to keep getting 1% better than our prior selves. Let's focus on developing our edge so that we have a skill that nobody can take away from us. Let's get through some weekly outlooks. Let's take a look at our higher time frame bias. That way we can create a game plan. That way we can be prepared for the week. Okay. Let's see. Let's start with the economic calendar. All right. First things first, we need to understand the important times of the week. Monday and Tuesday, we do not have any red folders. Wednesday and Thursday, we have some important red folders, both of them at 8:30 a.m. We have PPI on Wednesday, and we have CPI on Thursday. CPI is one of our highest volatility events. All right, so understanding that we have CPI at 8:30 a.m. on Thursday morning is very important. Why is that important? Because it's one of our biggest news releases. It provides the most amount of volatility out of all the other news releases. So to think that we're going to get a move later on in the week, the data shows it. The data shows that during CPI release, that has one of the largest movements out of all of the other news releases. Right? So we need to understand that because that's helping us and our expectations for the week. Okay? So, right? So even if we're looking at this right here, right? We have a swing low, we have a swing high, we have a new low, then a new high, right? So this would in fact be a breaker block, right? The type of entry function that I use, we have a breaker block plus an FVG, right? So this is in fact the unicorn model. Okay? What I'm trying to say here is not having large expectations is important simply because of CPI. Right? So asking price to give you a very large move on a Monday with no news, especially during a week where CPI is on Thursday, we're setting our expectations here. We're developing our game plan for moving forward in the week. You understand what I'm saying? So NQ did do a good job moving higher today, but I'm going to sit here and tell you that I will not be taking this long simply because of the logic that I just told you. Right? Even though this is the model I trade, if you can't develop logic that goes with that decision making, then you don't have to take the risk. You don't have to take a trade every single day. Okay? I'm not looking for much of anything today. Simply knowing that there's no news today and we have CPI on Thursday. And prices aligning with that logic. I mean, here is the open. Here's the open. And we've gone plus 5 points and minus 9 points from the open. We've barely moved so far, right? So lots of consolidation to start the day. NQ did do a good job moving higher. At least NQ got a move. But I'm setting my expectations for the rest of the session. Okay, so we'll come back to this so we can watch the model, see if it works or not. But I'm also providing the logic to the decision making. Let's go out here onto the daily chart so that we can understand some information to look forward to within the week. This to me is really important. This is how I develop a bias. I get on the daily time frame. I look at swing highs, swing lows, and FVGs. We could clearly see that ES took out new all-time highs there on Friday. After taking out new all-time highs, we then closed back inside the range. When we did this, we also created some bearish SMT here. Okay, so keep this in mind for now as we also get over here to NQ, because this is important information. I need to know, right? I'm developing a weekly outlook right now. I'm developing a game plan to understand how to move forward. I need to know if this crack in correlation here is going to hold or not, right? It's very clear that NQ did not take out all-time highs. ES did take out all-time highs. Okay, so let's make sure we're using the same 2 points in time as well. This is, I might have used the wrong one. Give me 2 seconds here. The 13th. Okay, so I think I did. Yeah, this is the 13th. So same thing though. Same results, right? So August 13th to September 5th. August 13th to September 5th. We can see that NQ is nowhere near those all-time highs. So in terms of creating a weekly outlook, this is important information to help me understand what's going to happen throughout the week. Okay. If this bearish SMT holds, then that looks like a crack in correlation. And then I would look for a move lower because of it. If this SMT does not hold, then that would be clear insight that our trend is continuing, right? Our trend being higher highs and higher lows, right? We're making higher highs, higher high, higher low, higher high, higher low, higher high, right? So a bullish trend, an uptrend, higher highs and higher lows, right? So if they invalidate this right here, if they take out this bearish SMT, showing that this idea is invalidated, then that would give me a conviction to understand that we're still looking for higher prices. Okay, so this is a weekly outlook for this week. It's very simple. We're just creating an if-then statement. Okay? The reason why we're using if-then statements is because there's no guarantees in price action. You could use whatever kind of information you want. You can use whatever kind of strategy you want. You can use whatever kind of concepts you want. But any type of strategy is capable of winning. Any type of strategy is capable of failing. This is why we're using if-then statements. We're not trying to predict the future. We're trying to efficiently react to price. In my opinion, instead of trying to have a guarantee or think that something always happens, understanding the randomness of the market is more important. So, very simple if-then statement to understand if we're going to continue getting higher prices. Will they invalidate this bearish SMT right here? If it's invalidated, I think we get higher prices. If it holds, then we have to be cautious for lower prices. Very simple if-then statement. That way you can understand how to move forward for the week. Okay, so NQ and ES, there you go. Oil, this is very clear to me, right? This is a daily time frame, and look at what we have here. On the daily time frame, you just got a short opportunity at a daily unicorn. Right? So breaker block plus FEG. Here's the FEG right in here. Equals unicorn. Look at this short opportunity. You could have gotten short at the beginning of the breaker, aiming for the low. Even better, we always talk about equal highs or equal lows. Equal highs or equal lows are one of our best forms of drawing liquidity. Very clear equal lows here. So a target for that bearish bias. Okay, so in my opinion, I'll be looking for lower prices on oil. So I have a bias of lower prices on oil. I have a if-then statement on NQ and ES. The dollar, I mean, this is just harsh, to say the least. I mean, this is the type of price action that is not even worth having a bias. I mean, look at this consolidation, right? Like, if anything, the only thing I would say here is that we'll continue to keep consolidating, right? Because this thing is stuck. It's been stuck for a while. It's been stuck at the lows. It's been stuck at the highs, right? We're just in this small, tight range, right? So I have no opinion here. I would rather just wait for more clear information, right? If anything, I would just say this thing's going to keep consolidating until it proves otherwise. Right? It's just going to keep going sideways within this tight range until there's some kind of clear breakout of that range. So that's the only thing I really have to say about the dollar. Lastly is euro. Euro's trying to get out of that range, right? It's inversely correlated to the dollar, right? It was doing the same thing as the dollar, just consolidating sideways. It might attempt to get out of the range, maybe. We'll see. CPI is probably going to be that driver. CPI is probably going to provide that insight. So, in terms of a weekly outlook for the assets that we've been watching, consolidation here on EU and the dollar. Oh, wrong list. Consolidation on EU and the dollar until proven otherwise. Oil is probably the only one that I can definitively say I have a clear bias. Lower prices on oil. Lastly, an if-then statement on ES and NQ. Waiting to see if ES and NQ can invalidate the bearish SMT. Okay, so before we go back to watching the entry function for today, let's hop over to chat. Do you have any questions about that top-down analysis? Do you have any questions about anything that we just went over? If you do, throw it in chat. I'm getting over to chat now to check on those questions. When you find that on the daily, do you drop to a lower time frame to trade? So on the daily chart, I get a bias. On the hourly chart, I look for higher time frame levels to execute from and cracks in correlation. Then when I have those two things, that's when I get to a lower time frame to look for an entry function. What's my dream car? I don't really dream about cars. To be completely honest, I have no clue. I'm not really into like vehicles like that. Are you trading before CPI? So you have to understand that non-farm payroll, CPI, FOMC, and bank holidays, those are my scheduled breaks all the time. I've talked about it multiple times before on the stream. I think having scheduled breaks is very important for your risk management, your psychology, and your mental and physical health. There are certain days that I would suggest not trading, and I just mentioned them, along with bank holidays. Ash, how's the live account looking? It's looking good. We're in our 4th month of the live account. It's just brick by brick, one day at a time. We'll continue to keep risking. We'll continue to keep learning. We'll continue to keep working. So it's still alive. It's still working towards another payout. It's just we're taking it one day at a time. That's actually a good question that I have for you all. Chat, how long do you stay in a funded account? How long do you hold a funded account? Give me an amount of days that you normally keep a funded account. That's where we really work on our risk management, right? Because our finances, our income to expenses, that's where you learn whether you're profitable or not. So this is why it's an important question, because if you're staying in a funded account longer, then you will have less expenses, giving you a better opportunity at becoming profitable. Because being profitable is not just taking a winning trade. Being profitable is not, doing a back test that shows a good win rate. Being profitable is not taking a payout. Being profitable is when your expenses are less than your income. One of the ways at bettering the bottom line would be staying in that funded account, right? Not having to pay for expenses all the time. So yes, still in the funded account, still working towards another payout. We've had many payouts from the funded, the live account. I'm very happy with that account. At this moment in time, it's a matter of continuing to stay in the process, continuing to manage the risk, and take it one day at a time. Ash, what's your morning routine? My morning routine is getting outside, starting the day with some sun on your skin, starting the day with getting your body moving, right? You should always put health as a priority. Okay, so get up, get your body moving, get some sun on your skin, then get a little caffeine in you. That way your energy levels can be at the right location. Your focus can be ready to go for your business. So it starts with getting your body moving, getting a cup of coffee in, having a small snack so that I'm not hungry during the session. After that, I then move over to my communities. I talk with all of my accountability partners, answering questions, providing analysis, responding to people, talking to the communities. After that, that's when I start to develop a bias. That's when I'm analyzing the charts. That's when I'm creating my game plan for the day. Once I've created a game plan for the day, that's when I look for executions during New York Open. So it's a matter of taking care of your mental and physical health first. Then it's a matter of doing your due diligence and creating your process. Then it's a matter of executing that process. Thank you for reminding us the daily time frame, day in and day out. You want to be aligned with the higher time frames. The higher time frames are going to hold more influence. That is why I get my bias from the daily chart. Even if you don't want to use a bias in your day trading, at least be aware of what the daily chart is doing. A 1-minute price fluctuation is not going to hold any influence compared to the daily trend. So analyzing the daily time frame heading into every single session is something that I do. Hey, Ash, did you consider new week opening gaps and new day opening gaps? That is not something that I look at. I'm a huge component of simplicity. There is clarity in simplicity. So the less amount of concepts you use, the better you'll get at executing, right? If you just fall into that information overload and you're always looking at 100 different concepts, you're going to get confused because all of them are probably going to say something different. There's going to be very little amount of times where all of the concepts are aligning. Hey, Ash, if you have your bullish daily bias set, then you see a major reversal like the one seen Friday, and you see a bearish unicorn, do you then change your bias? Nope. I set my game plan before the session starts, then I execute the game plan during the session. I would rather be wrong in my bias and take no trade than create a game plan and not execute it. The purpose is having a process-driven mindset, right? Fall in love with the process, allow the results to be a byproduct of it. Create your game plan, execute that game plan. Whether that works for you or not, that's how I participate in the market. And that's what I'm doing here. I'm just sharing my journey in the market. So you do need to understand that it doesn't matter what I say here, that you should be choosing what works best for yourself. And you do that by collecting data every single day. Show up to your hours that you're going to trade, and then collect the data, and then review the data to see what works best for yourself. What's your dream rental property? See, Hugo knows. Now we're talking. Hugo understands. Yeah, give me one of those like 250 apartment unit complexes. That's where we're heading. That's what we're looking for. Rental properties, not vehicles. Ash is into trucks. I do have a truck, so I am a truck guy. That is true. Ash, entry model in 4 hour, 15 minute, 1 minute. Did you see a 1 minute entry function? Is that what you're saying that? It's the same thing that we're looking at. Right? If you're talking about the bullish one, right? This one did end up getting an entry, so we can watch it. This is the same thing that we were looking at on the 5 minute. So we'll watch this one since it did get an entry right in here. Right, that would have been the long entry here. So if you're pointing to the bullish one, I agree with what you're saying. Do you even trade, bro? No, I don't trade. That's that's why these payouts have, that's why I was able to get withdrawals from this live account. That's why I'm sitting here standing, talking to everybody every single day. No, I've never traded in my entire life. No. For everybody else that was listening, obviously that's sarcasm. Can you please get through how to determine bias in general? Yeah, I already went through my biases for the day. It's very simple. I get on the daily time frame. I look at swing highs, swing lows, and FEGs. When price is above a swing high or inside of a bearish FEG, I have a bearish bias. When price is below a swing low or inside of a bullish FEG, I have a bullish bias. That's it. There's nothing more complicated to it. Just, once again, simplicity is key. Less is more. Ash, do you take 1 minute entries? I've taken 1 minute entries. I've taken 5 minute entries. I've taken 15 minute entries. I've taken hourly. I've taken daily. I've taken weekly. I've executed many, many different time frames throughout my trading. It's been 3 months, Ash. For what? 3 months of what? If you're talking about the live account is in the 4th month. Oh, I think we know what that means, chat. Chat, I think we know what that means. Get ready. 50 free resets using code BREAKTHROUGH50. Who's going to get one? 50 free resets using code BREAKTHROUGH50. Go and get one of those resets. Throw a W in chat if you're able to get one. Throw a W in chat if you're able to get one of the resets. Congratulations to all the winners. Alrighty. Definitely lost my spot in chat after that one. Alrighty. Looks like this is provided 1-to-1 R so far. So I don't remember who the individual was that pointed it out, but who took the long? Who took the 1 minute setup? Who took the long? And if you did you take 1-to-1 R? Are you done for the day? Or are you waiting for 2R? Ash, have you ever been broke? Absolutely. Yeah, there's been many times where I had no money. I mean, if you were a college student, you would know exactly what I'm saying. If you have to pick one asset to trade for the rest of your life, which would it be? NQ. NQ. NQ is Bay. Right here. NQ. $50 points on 2 accounts. Huge W. Huge W. Congratulations. I would definitely be done for the day if you got 50 points on 2 accounts. 100%. Amazing job. Ash, I've seen people on Twitter talking about day trading 24/7. Stressful business, don't you think? Do you think this is true? If yes, why are we chasing consistent profitability if it's so stressful? In my opinion, I think that is misinformation. I think people try to market a certain lifestyle so that they can make sales for, whatever they're doing. I truly don't believe that trading 24/7. I don't think trading full time is a good idea. If you knew how risky trading was, I think you would probably say the same thing. I've spoke about it a lot here on this live stream. You need to take care of yourself. Like you need your day-to-day life, right? You need a main source of income that's going to cover all of those bills. There's nothing guaranteed about day trading. So if you want to risk your day-to-day life, that sounds extremely risky. And I highly suggest you don't do that. Right? Like, get a 9-to-5, get a full-time job, right? Get a full-time job. That way, your family, your health, your well-being is always taken care of. Then, even crazier, I know this is going to ruin all your dreams, but go get a second job. The first job covers all of your bills. The first job makes sure your family is healthy and happy. The first job makes sure that there's always food in the fridge and the lights are always on. Then the second job is the money you can use to try to start your business. But notice I'm saying second job, right? Don't risk your first job. Make sure that your family is safe. Make sure that your family is healthy. Make sure that you're healthy. That's what the main job is for. Then go get a second job, and the second job is the money that you use to try to start your business. Like, why is everybody so scared of working more? Like, when did it become? Why is it like those lifestyle marketers that make it seem like retiring at 20 years old is a good idea? You're going to be so bored. Once you travel the entire world and you have nothing to see left, like, what are you going to do then? Are you just going to, like, what comes after that? Don't you want to accomplish something? Don't you want to achieve something? Don't you want something to work towards? Like, that gives you purpose. That gives you something to do in your day-to-day life. You know what I mean? Like, so in my opinion, I think you should work more for the things that you want. Right? Work more for the things that you want. Lastly is, it takes money to make money, right? So for those individuals saying that, like, day trading is a full-time job, well, what happens when you need money to start that business? Where do you get that money? Where do you get the money to start the business? You get the money from working. You need money to make money. You see what I'm saying here? You need money to make money. So go work. But very good question. I won't harp on that one any longer, but I'm going to continue to keep working. You'll find me working day in and day out. You'll find me here trying to do everything I can each week. Definitely lost my spot in chat again after that one. Let me refresh. Let me see where we're at. Chat, if you're finding any value from any of these conversations, if you're finding any value from all the giveaways that we do, if you're finding any value from any of the hosts or the guests that we have on stream, sub to the channel, like the video, turn the notifications on. We're going to continue to keep working and learning every single week. So if you want to be around other like-minded professionals who's going to continue to keep working, turn those notifications on so you can join the stream day in and day out. So the position we've been looking at this morning, it's doing fine so far. The only entry that occurred on this was on the 1-minute chart. You can see that the 5-minute chart didn't tap back into the breaker block. We did get an entry on the 1-minute chart. So anybody that was watching the 1-minute chart, you had the opportunity to get long there. Ever since then, it's gone about 1 hour. So are you going back to the very beginning of this stream, or of my segment? Let me fix that. Going back to the very beginning of my segment, are you going to have large expectations today or not? Or are you going to be satisfied with the market, with what the market has given you already? Knowing that today is Monday with no news, knowing that CPI is on Thursday, what are we doing here? Are we just taking 1 hour? Are we going to be done for the day? Or are you going to keep looking for a 2 hour? What do you think, chat? Ash, what's your opinion on Trader Steve? I don't know who Trader Steve is, so I don't have an opinion. Holding till close. 2R, 2R, 2R. All right, let's see what we get. Let's see if price wants to run to 2R. Do you prefer SMT with a unicorn? If so, higher time frame or lower time frame SMT? Yes, SMT acts as a confirmation tool. Okay. SMT is the thing that says it's time to engage with your idea. I'm looking for higher time frame SMT when I'm looking for SMT. Okay, so yes, I do look for SMT. Reminder, chat, starting today, we will have Steven covering the Asia session, 8 to 10. Oh, is that Trader Steve? We're starting a Asia session stream? Let's go. Let's go. The Asia session stream. Love to see it. Chat, definitely show up for the afternoon session. 8 to 10 p.m. Eastern Standard Time. Ash, why did you draw a bullish breaker if your bias is bearish? If you go back to the beginning of the stream, I gave you an if-then statement. Right? So there was no clear bias. It was an if-then statement. If this happens, then that. Nowhere in that did I say bearish bias. There's a difference there. If then is you reacting to current information. Bearish bias would mean bearish bias. There's a difference. On top of that, there is no bearish unicorn to even look at. Right? So I don't agree with that statement. Slow and steady wins the race. Slow is smooth. Smooth is fast. Let's see if the position wants to go to 2R. It is just crawling. Crawling. See what happens. Let's see what happens. Oh, also, I forgot about our change of strategies. So, chat, once again, just trying to prove a point here. Just trying to prove a point here. It's just another downtrend breakout. Just saying. This was, once again, just another downtrend breakout. Right, so we had a trend here to start the day. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Breakout. Breakout. Where are the trend traders at? Very clean trend line breakout. Could have easily caught the long there after we broke out, right? Just let this thing break out of the trend. And once it does, this is a long right here. Or what's the other one? These are wedges or something like that, right? Isn't there like the people that do the bull flags and the bear flags? This is a descending wedge, right? The descending wedge. We broke out of this wedge here, and then we went higher. 67% chance. Of course, 67, right? Chance to break to the upside. Very nice. Nice breakout there. Add volume. Yeah, let's see what volume tells us too. Increased volume during the breakout. That looks like a more convincing breakout than if there was no volume during the breakout. Look at this increasing volume here at the time that we broke out. So where are our trend line traders? Ash, do you ever use the unicorn model on single stocks or equities? Yeah, the last time I purchased a stock was Tesla and Amazon. Amazon was a weekly bullish unicorn. Tesla was a daily bullish unicorn. So yes, I have. But stocks and equities for me is a long-term purchase. I don't day trade stocks and equities. That's something where I'm just putting money aside for my kids. So got about another 10 more minutes here with you all. If you have any type of questions or information, feel free to throw it in chat. We've just been going back and forth with chat this morning. We had another giveaway. Absolutely incredible that we continue to just keep handing out value every single week. Started to develop a weekly outlook. We went through ES, NQ, oil, Dixie, and Euro. I forgot about that. After that, we took a look at a lower time frame entry, a trend line breakout, increased volume on the trend line breakout. Makes it look more confident than if there was not volume here. And it moved nicely higher thereafter. Yeah, is this the next trend line breaking here? Is this the next trend line, or should we be getting short now? Let's take a look. Don't like the volume there. Let's see if this becomes a short here. Shorted the trend line break. Let's see. Looks like 2R would be down here around 6506. Short from 513. Yeah, that is the break there at 513. Is trying 1 minute bearish unicorn worth it now as SMT still isn't invalidated? Whether it's worth it or not determines on whether you're willing to risk or not, right? Seeing something on the chart does not mean it's worth taking. There's so many more things that go into your decision making than simply looking at a price action pattern. I highly suggest you go back into understanding logic, understanding risk management. Take a look at some of that stuff first before just coming in here and trying to trade every single time you see something on the screen. Ash, when do you confirm your bias on SMT? You don't need SMT to have a bias, right? I get on the daily chart. I look at swing highs, swing lows, and FEGs. depending on where price is currently located, that is how I obtain a bias. I don't need a confirmation to have a bias. So using SMT as a confirmation to a bias, that's not something I do. I'm capable of having a bias without that. Will the trend line break get the 2R? Let's see. Just so everybody understands, maybe there's some newer people in the stream. We've been having a conversation of terminology, right? A lot of people get lost in looking for the Holy Grail. A lot of people get lost in thinking there's some kind of secret strategy. The reason why I'm continuing to talk about different terminologies is to show you that we're all trading the same thing. We're all trading price action. So no matter what you want to call it, no matter how you operate, there's nothing new under the sun. So the purpose of me doing this is to make sure everybody knows that you shouldn't fall for all that marketing. You should just focus on developing your own skill. Don't get lost in the information overload that's shown on social medias. Just focus on developing your own skills. Your attention should be right here on price action, obtaining data so that you can build the muscle memory for yourself. Okay? That's what matters. I don't care what you call it. I don't care who you follow. There's nothing new under the sun. And you should always choose being an independent thinker over anything else, because you are the one that will be clicking the buttons for yourself. So you need to build the muscle memory, showing that you can execute this business. Okay? Conviction is built through experience. Show up and collect that data every single day. Ash, I think we need to develop the experience ourselves. Yes, that is exactly what I'm trying to point to. You should put in the time. You should collect your own data. You should make your own decisions, right? Like if you wanted a boss, just go get a 9-to-5 job. If you wanted to be following somebody else, right? If you needed somebody else to tell you what to do, you should just go get a job because it's more stable income. Ash, what do I tell people that think trading is gambling? Do you not? Let me ask you, Raphael. Do you think trading's gambling? Yes or no? You don't think trading's gambling. What's the difference between putting $50 on the blackjack table compared to putting $50 on NQ? What's the difference? You can have an edge on the blackjack table. You can sit there and analyze probabilities on the blackjack table. You can have a game plan, right? You can decide to take another card at certain probabilities versus not. You can have risk management in blackjack. Let me ask you a question, chat. If the dealer, we're playing blackjack. If the dealer is showing a 6, right? That's the card that is showing. And you yourself, you have 16. The 2 cards that you have come out to 16. And the dealer is showing a 6. Are you going to hit or are you going to stay? Yes or no? We're going to hit on that. Whew. All right, so all the people that are saying hit aren't thinking in terms of probabilities. You're not thinking in terms of probabilities, so you're just gambling, right? If you're thinking in terms of probabilities, you would want to stand. You do not want to hit because you want the dealer to bust. You want the dealer to go over, not you. You don't want to lose. Let the dealer take the face card. Let him go over. Why would you put the probabilities against your favor? The dealer's going to bust there. The probabilities of the dealer busting there is likely. So in terms of thinking in terms of probabilities, it's the same exact thing as this right here. You're just analyzing probabilities. Dealer has a 75% chance to bust on 16. Is that an actual probability? Is that a proven percentage? Because I don't know the actual percentage, but I know it's more likely that the dealer would bust in that situation. Right. So the purpose, right, the purpose that I'm bringing this up is if you know it's likely that you're going to bust when you're both holding 16, would you take the bust or would you let them take the bust? Right? Would you want to hold your hand so you can stay in the game, or would you like the dealer to take the face card so they can bust? You understand what I'm saying? Bust. So if you go over 21, that's what a bust is. If you go over 21, you're out of the game. Automatically, you're out of the game. So do you want to get pushed out of the game, or do you want to let the dealer get pushed out of the game so you could win? Right. So just going back to the original question, is trading gambling? Right. Yeah. All we're doing is analyzing probabilities here. You could also analyze probabilities gambling at the casino. Right. If you go to the roulette table and you choose to always play black or red, you're dealing with a 50-50 chance because there's it's less than 50-50 because you have the greens on there as well. But you understand what I'm saying? There's chances, there's probabilities. It is gambling, without a doubt. You are taking your money to risk it on an uncertainty. That's what it comes down to. You are risking money for an uncertainty. And just so we're aware, we're all allowed to have our own opinion. So agree or disagree, it's completely okay. We're just having a conversation here. It's completely okay to have your own perspective. We're just having a conversation. Raphael asked me a question, so I was responding to it. It's completely okay to have different perspectives. I'm not trying to convince anybody. I'm just responding to the question. Looks like that the short opportunity is about to get stopped. The good old bullish unicorn is still in play. So this one from earlier. We'll see if those longs ever go and hit 2R, but the bearish trend line breakout did not play out. We'll see if those longs finish 2R. But with that being said, I'll have to provide these results on Twitter because my segment is coming to an end. So if you want the update to this, take a look at the Twitter. I didn't realize the time, but my time is up. So I do want to say thank you. I really appreciate everybody that continues to keep showing up. I really appreciate that we get to go over all these questions, that we get to communicate, share perspective, share opinions, share experiences. This is how we're going to continue to keep working and learning. Okay, so gaining more perspective is going to provide so many learning opportunities. If we did this on our own, we'd be secluded to our own experience. So definitely keep showing up. Let's continue to keep working and learning. Thank you for all of your time. Thank you for all of your questions. I'm very excited to hop back on here tomorrow. So I will see you all tomorrow. But before that, stick around for Tom's segment. Let's go ahead and pass the mic over to Tom. I hope you all have a great day. I will see you all tomorrow.
And we're back again. Hello, everybody. I'm not ghosted yet, but I'm here. Hello, good morning, good evening. Happy Monday, everybody. Let's sing a happy Monday. First of all, Ash, thank you so much. W's for Ash. This was a great session. Again, always lots of value. Ash is the GOAT. I can't say that enough how much I enjoy listening to his segment. It's just awesome, as always. Thank you, Ash. Have a great rest of the day. And yeah, definitely tomorrow. How is everybody? Come on. It's Monday. Crazy Monday. You know, we had a crazy Friday, and now it's crazy Monday. So everybody, let's just print that money, print that profit. You know, who cares about tomorrow? It's Monday, right? Still have time to fix things. If we do something very bad, we can still fix it. It's only Monday. All right. Welcome. Special hello to the hosts and the mods as well. And by the way, big news, everybody. Abhishek got married last week, right? Yeah, he got married last week. Yeah. We're all shocked too. Mostly because somebody said yes, yeah? No, I'm kind of trolling. But yeah, I saw the wedding photos. Beautiful ceremony. I mean, it was really beautiful. Shame the groom showed up, right? But anyway, let's move on. Just a bit of a troll. You know, he's the new man. He, you know, Abhishek has to take this. He has to take the heat. You know, you got to get used to it. So anyway, sorry, Abhi, I had to troll you a little bit with that. You know, you're the new man. You have to take this. All right. Getting credit though, you know, Abhishek is the guy. Anyway, I'm not gonna say more. I'm not gonna say more. So yeah, you know, yeah, it was great. Anyway, I'm doing great. Thanks for asking. This was a great day. Super happy to be here. And obviously, Abhishek is the man, is the mod. He's the god. And he, you know, if you guys really want to have some cool giveaways, I mean, obviously Magnus he's the wizard. Like Magnus, I told you, he's the rocket scientist. And I don't know, like Abhishek is kind of also like a god, basically. So they make things working in the background, you know. So if you want to be real good with someone, it's Magnus and Abhishek. So, and obviously with everybody. Okay, I lost track. Where was I? As I wanted to say, we are just a no. Let's hold your horses, okay? We're going to go and we're going to do some tape reading because I know you guys love it. And that's why we're here for some tape reading. I know you love it, but you need to understand tape reading, reading the narrative. Ezra, good to see you. So, and Danny, of course, Danny is here. So W's for Danny as well. All right. And W's for everybody at MyFundedFutures. Don't worry, boss. So I hope I didn't left out anyone. So we got to do some reading of the narrative. Nice to see you too. Nice to see you too. So, and by the way, reading the narrative. I told you guys last week that is going to actually build up. I mean, if we're talking about building the confidence, reading the narrative is going to help a lot. That's going to help a lot by building your confidence. Okay. And by the way, did you guys do the daily routine? Daily routine. I'm not talking about the no, not about that. Daily routine. Part of the daily routine. Call up everybody in your phone book, neighbors, high school friends, ex-girlfriends, boyfriends, ex-husband, wife. I don't care who it is. Okay, send everybody MyFunded TV YouTube link. Okay, subscribe and like the channel, obviously, right? Okay, so let's just move on. So let's just do the quick reading here, because I think it's just super amazing. Now, in this London session, this early morning, I mean, this was just absolutely, this was the waiting. It was definitely the waiting game. I was basically sitting through this morning. I don't even remember what happened here. I think I took a long position, maybe. I think that's what I did. I don't know. I think maybe I had one position. Oh no, that was on gold. Sorry. I took a trade on gold this morning. No trades for me in NQ, but if you go to the 1 hour, I wanted to show you guys this. This is really cool. This is really cool. And that's why I love trading, man. So go to the left and go to the middle of August on the 1 hour chart. Actually, you don't have to go. Just watch the charts. Stick around. That's the job. If we go to the middle of August here, and what do we have here? Beautiful, beautiful supply zone. I know you guys love it when I talk about supply and demand zones, right? So this is valid because it picked up liquidity from this bearish fair value gap, bullish candles pushing all the way up there, and then shifting the structure all the way, actually multiple ways. Sorry, multiple levels here, and also here. Bearish market structure shift here and here. Never mind. This is the 1 hour chart. Actually, the move started obviously up there, but it was definitely a confirmation that this market just wants to keep go lower and lower. And obviously we had another one. Anyway, that doesn't really matter. This is the 1 hour chart. Okay, so let's just go back today. All right. Now this is where things gonna get interesting. Okay. This is last Friday here, and obviously we saw what happened here. Last Friday, New York AM session, the market actually went up there all the way up to 23,902. Now, this is the micro, so I don't really, doesn't really matter. The mini is almost at the same spot. So it went up there, where to the midpoint of this supply area. Okay. So it reached the mid-level. It did not actually reach that. So almost had it. And then the whole market just went down. Okay. Yeah, we all know that. So let's just jump into what happened today. And this is why reading the narrative can actually help a lot. Now, obviously, I was eyeballing that 879 level. Why that level? Because that's where the 1 hour supply zone starts. And because this did not make it higher, this is creating the Friday high. And how convenient it is just basically at the midpoint of that supply zone. Now, I'm not even going to talk about the London session too much. So we have so many things to talk about. As the market opened up, and I'm going to go down to the 1 minute here. I think we just need to, right? So to understand what happened here. So we had the market open 9:30, all good, just sitting on our hands, and then going higher, created the first presentation gap. I know everybody, likes it because that's the kind of new hype, which actually it's really amazing again how the reaction happened later. I entered to a long position. Where did I enter? Yeah, based on the first presentation gap on this pullback, I entered the long position here, live on stream. It was great. I took profit at somewhere around 75, so I was a little bit lucky there. And then market actually went back down, and there was a 15-minute buy side imbalance, sell side inefficiency. Now, there's small details, small things that you might be watching if you're trying to, or should be watching when you're trying to read the story, trying to read the narrative. One of these are somewhat candlestick formations, but as price went down into that first presentation gap and picking up liquidity from the 15-minute buy side imbalance, sell side inefficiency, aka fair value gap, two things happened, which actually gave another opportunity, because this here couldn't really move into the supply zone, right? So it technically failed. And I said, like, if it's going to show some signs of reversal, then there's a chance to go for it again. Now, these are just, we need to always watch every day. Exactly. But, don't get into like the analysis paralysis. There are some price action patterns or candlestick formations that can help you to understand what's going on. Now, first of all, we need to understand that here, before 10 a.m., 9:57, it failed to go higher. It failed to tap into the zone. Now, usually I say we should see at least these zones being tagged. Obviously, this was earlier tagged last week, but this is a new day. So I was like, okay, we should be going there. It failed. So we went down. But what is down here? We have a fair value gap, buy side imbalance, sell side inefficiency, great liquidity area. We have the first presentation gap as well. But mostly we have a bullish, it's not an engulfing candle formation. I don't even know how this called. I'm going to zoom in and trying to explain this. So we have a bearish candle at 10:21. This is the 1 minute. And we have a bullish candle here. Now, this bullish candle has not traded lower than this bearish candle. So that's kind of interesting. But it has traded higher. It's not an engulfing candle, I know, but it traded higher. That was the first sign. So if I see this formation, hey, Joe, what's up? So if I see this formation, it kind of indicates me a possible reversal in price. So if we're bullish, I want to see, bullish engulfing pattern also works. But if it's not engulfing it completely, but at least it trades higher, that's also a good sign if it pairs up with a certain liquidity area. So in this case, a first presentation gap and a 50-minute fair value gap as well. Okay. So this is in a perfect place here, perfect area. So as price went higher, what is here? Obviously, it's super easy. This is an inversion fair value gap. Let me just put this to the front. So there was a fair value gap here. This candle here, this bullish candle at 10:23. Actually, let me put this right here. At 10:23, perfectly closed higher. It's a beautiful close on this fair value gap. So it basically inverted. So what do we have here? One check mark is, oops, that's bad. Anyway, one check mark is the zone down here. The other one is the candle formation. The third one is an inverting fair value gap, inversion gap technically. So these are obviously very good signs. I'm just saying that it doesn't necessarily have to be like an ICT 2022 entry, but it's almost like that. If you have like, we have these price action patterns, we have these candlestick formation, whatever you want to call it. And if you're having your target, I told you guys many times how important it is that you have a valid target. If you have your valid target and you have a good conviction that price still has a chance to go there, I usually say this: look for at least 3 confirmations. Okay. One confirmation, I think it might not be enough. Okay. So even just one single engulfing candle is not enough to reverse the market. Okay. Anyway, if you combine it And this is the example why I showed you guys this, is because if you combine the engulfing pattern, I mean, this is not engulfing, but I don't know what's it called, because it's, as I said, it did not trade lower, but it traded higher. I think there is a word for it. I just noticed that this formation is basically like a secret sauce to the whole picture here. And you can see it, by the way, on the bearish side as well. Let me just try to find you. Anyway, I'm going to find you a bearish situation as well later. Okay. But this here, perfect. So you need liquidity sweep, right? Usually if we're looking for a possible reversal or even continuation, we do need some orders to ignite that move. Okay. We can call it propulsion, whatever, but we need some sort of a liquidity or area of orders to ignite that specific move. In this case, one check mark is the liquidity area down here on the 15-minute. Beautiful take here. A candlestick formation in this case, again, in itself, it's not a big deal, but it's confirming that the move has been finished. And then the inversion gap, which I don't really use, but if I see all this, the inversion gap is basically the third confirmation that you can actually use to finally enter a trade. So this is not going to be like a typical ICT entry or whatever. The main key point is what I just wanted to say here is if you have like 3 confirmations on your entry model, then it's good to go, okay? As long as you have a valid target. Now, let's just scroll back of what was happening here. Price is edging lower. Let me go back to the 5-minute here. Price is edging down. Obviously, there is no news, so it would be interesting. Now, don't forget that, yes, we are shifting, and we shifted already. I think that 900 level is still kind of important. Also because ES also has a supply zone a little bit higher. I'm not saying it won't go down, but maybe I'm asking too much from the market. I'm not in a trade today. It was an awesome day, but can you go into lower time frame? 15 second. I don't have a subscription on TradingView on the 15-second time. I never use the second time frames. Okay. Sometimes I checked it on the 30-second on Quant Tower, but on TradingView, I just have the essential subscription, I think, because I don't really need a lower time frame. I tried it. Maybe there's a fair value gap. Who knows? But look at it. Look at this. We have an inversion. I'm not saying to go short, but wow. Quite interesting, right? I'm going to extend the first presentation gap right there. And now this is a bit of an interesting scenario. Price is now hovering in between these 2 inversions. Wow. And now there's nothing, by the way, there's nothing wrong if you're extending the inversion gaps. Okay. So there's nothing wrong because at least you see how price is reacting to these areas. Now, there's a possible rejection bounce here, not rejection, but a bounce. If it would this is not enough for me. I would really want to see this go lower. I want to see a close below this 800. What's the low here? 806. Yeah, that would be the level. Otherwise, I'm still going to say this is bullish. I'm sorry if you guys are short, but I'm not going to trade this because it's out of my rule set. But I can imagine that this one might be grinding higher into the 23,900-ish area, right? So that was the technical stuff. And what about gold? Oh, yeah, I wanted to show you guys. Gold was awesome in London session. Now, the gold trade this morning, I actually killed it with the gap. So there was an opening gap, the new week opening gap here, which created basically, price went up there, tried to close it partially, created an Asia high on the mini 37.9. All I did, and just a quick recap, and then we're going to check what's happening right now. The only thing I was looking for is to close the gap. And obviously, in London session, you could see some pullback into this level, and I actually went crazy on this one. And also on the Sunday open, there's something I did. Sunday candle went down here. Sorry, yeah, the Sunday candle went down here. I actually went total crazy on the rejection and made some real good profits today. So anyway, right now gold, because we're at all-time high, right? Are we? Oh yeah, we are. All-time high. Since this is uncharted territory, there's nowhere to go. I mean, there's lots of places to go, but the only thing we have is these round numbers like 3,700 up here. 3,700 is a level to go to. It looks like it's inverting this on the 5-minute. There is no zone that I like. There is one order block down there. I think it's on the 15-minute, but it's too far away. I don't think that gold is going to sell off. I don't see any reason. There is no news driver, nothing that we expect today. I think President Trump is not going to, well, we'll see if he tweets something, but otherwise we don't see any reason for gold to just go down. So it should be a quiet day. I would be careful with the shorts. Okay. I'm not going to short. Yeah, Raphael. No. I'm not shorting this. Quite the opposite. Be very careful of shorting gold here. Okay. Even if it, drops down, whatever, don't chase it. It could be just a liquidity sweep. I would not be shorting gold. Okay. For now, this is the scenario I was thinking. I'm still kind of married to the idea that we should be revisiting that 900 level. That's what I think. This inversion gap repelled price a little bit higher. I don't know. Obviously, we're approaching the lunch hours, so low probability setups. Gold used to be so easy to trade. Gold is basically just going higher and higher, like all the markets. It's, it depends on how you trade it. Like, I think if you're a swing trader, and obviously we are mostly like day traders and we're focusing on like a 2-hour session or whatnot, because that's what we're doing. We can still focus on both sides. A short setup can come from a single pullback, right? So I think gold is a good alternative if NQ is not moving. And I just want to say something about ES. ES is also awesome, but the thing is, it's just too slow for me, mostly in London, right? It's just slow. Anyway. Any questions regarding setups or technical side or trade analysis or anything about this? Because, obviously it takes a lot of patience and waiting game to get through, especially at this hour, right? Especially when we're approaching the lunch hour. And by the way, hold on, let me just check something. And this is exactly why we need to prepare. Do you have a scenario? Do you have a game plan of what to do? Even if you're, as I said, even if this is your first time of the day when you can sit down to push the button. I said this, I think the lowest probability trades are in lunch hours. So just be careful. I have a question, but not about trading. Okay. Well, you can ask it. Maybe I'm not going to answer it. A lot of patience. Exactly 12. 12. I like the name. Depends. Yeah. Don't make it complicated. Exactly what Ethan is saying. Don't make it complicated. So, your favorite trading session? It's hard to say. Everybody would say, "Oh, I love the New York session." I think London session and New York session has their own specialties. I would say that, right? What time frame do I trade, Bob? My entry time frame is 90% of the time, at least 95% of the time is the 1 minute and the 5 minute. I'm trying to reduce it to the 5 minute as possible. Sometimes like 5% of the time, maybe the 15 minute, but that's very rare. I'm trying to reduce it to the 5 minute as much as possible. Asia session is good too. I'm just saying, like, London session has its specialties. New York session has its specialties. For example, in London session, what I noticed in the past couple of years, I can say that, is that there's not too many specific levels that the market has time and volume and momentum to take out or visit or mitigate or whatever you want to call it. So, hey Ivanovitz, what's up? So, I think in London, obviously the price moves a little bit slower at most of the time, but it's easier to spot a level. It's easier for me to practice my discipline, because if the market is not going in that direction, then I'm just going to sit back and relax. Now, I like that. I like that because we can have some conversations, it's kind of cool and everything. But in New York now, all hell is breaking loose, right? So, yeah, just a second, Ezra. So all hell is breaking loose. So you could be changing on a very volatile New York AM session. You could be changing your bias like multiple times even, especially if you are ranging or whatever. It could be a little bit crazy. And that's why, I like them both. It's just hard to say which one is the better. How would you... Oh, yeah, sorry, just a second. For Ezra, do you like longs or shorts? In the past couple of weeks, my long positions were better, by the way. I couldn't say that, okay, my brain is wired to the long positions more than the short positions. I know some traders are saying like, oh, I'm better with the long positions. I don't really have a bias, Thank you, Dabadig. How would you compare the open of gold futures to NQ futures? It's hard to compare because gold not usually moves, and sometimes it's not moving at all. So not that I'm trading gold at the 9:30 market open, but gold is a tricky one. That's what I would say. So I think gold is trickier. Well, Cheater, I think one of the best skills that I managed to somewhat, I wouldn't say master it, but at least, getting better is when to sit out from the session. Okay. So compared to myself, like 2 years before this, like it's much easier for me to sit through a session and just sit on my hands and not do anything. But what I still do is trying to tape read, read the narrative. I'm still trying to read the price action. I'm still trying to come up with a story. And if the story makes sense, then maybe I enter a trade. But it makes it much easier. Nowadays, I'm definitely, I'm getting better of not pushing the button. Like 2 years ago, I was pushing the button left and right. Like I was taking like 10 trades in a session, at least. That was the bare minimum, maybe even 15. So nowadays I'm trying to reduce it to 1, 2, maybe 3 trades. And my goal is to have 1 or 2 trades in the whole day, including London and New York. That would be the goal. But anyway, you're welcome. Thank you. Yeah, gold is tricky. Be careful with that. But it's always about how you prepare yourself, okay? So it's not about predicting the market. It's about preparing, because that's what we're doing. When you're doing your daily analysis, okay? Tom, there was a time when I just could not sit out. Yeah, exactly, Cheater. Exactly. So, as I said, preparing is also super important, right? We are not predicting, we are preparing. And that's why I said about all those things about the pre-market analysis, to have your key levels on the chart, okay? Super important. So, yeah, exactly. So most traders are basically wasting energy, trying to predict the market. And if you're trying to... I'm going to say something after I'm finished with this sentence. When you're trying to predict the market and it's basically draining down your energy. Why? And I know that there are some contradicting opinions about what we do exactly. So are we predicting the move? Because I heard, for example, ICT saying that we are basically predicting, but then ICT was saying no, because basically we are reacting. So what are we really doing? I'm actually curious, like, are we predicting the market or are we reacting to the market? That's kind of an interesting question. I ask myself this question all the time. Am I really predicting or am I trying to react to the market? I'm leaning towards the narrative that we are reacting to the market. There's the old saying, reacting. Yes, reacting. Exactly. Depends on your, Jan, that's also a very good answer, Jan. Depends on your trading style. For example, and this would be somewhat the best answer, not the best, but the best, basically. If you're swing trading, depends on, you're trying to predict the market. Imagine the swing trader who is holding trades for not just even 1 day, but for 3 days, a week, maybe even 2 weeks. That swing trader is definitely trying to predict the market based on some technical or fundamental narrative, which is cool. But as day traders, I would say that, yes, Rovenarts, predicting the reaction. As day traders, we are most likely reacting to the market because we don't really have too much time throughout the day to enter, take partials, whatever, or just sit through the trade, sit through the session, close down the trade. All the rituals have to end within like 2 to 3 hours. If you're sitting like 4, 5, 6 hours in front of the screen, I think that's just too much. If you're just, yes, I've been there. I was sitting like 12 hours, 14 hours throughout the day. My family was having concerns like, are you okay? Really? Because I was backtesting as well, not just trading. But anyway, that's a different story. So we are most likely, and obviously I accept the opposite answer as well. We are most likely reacting to the market. React to the prediction. That's also good. I love that. React to the prediction. Yes. And you know what? That's actually true because you have a narrative built up by reading the market. You have your key levels on your chart. You have everything. And that's a prediction. And you are going to react as the market is going to show you the way, right? Jay, what's up? Ideally, you should be reducing the amount of time you spend trading more experienced. That is the ideal outcome. I agree. I agree. Yeah. We need to reduce that time. So, but preparing to the market is also like somewhat predicting. But let's just go into this because this is what I wanted to talk to you about. So we are not fortune tellers. That's the news flash, right? We all agree that we are not. Are we fortune tellers? We are? Are we fortune tellers? I have to ask someone. I have to call on. Anyway, I'm not going to ask anyway. So we are not fortune tellers. We are? Okay. So the market doesn't care about our prediction. That's what I wanted to say. You guys have to ask Abhishek about this. He's Abhishek and Magnus is handling. It's their department. I'm just giving you the narrative here. Flip a coin. That's also good. You're a fortune teller. Everybody, Bob is a fortune teller. All right. If anyone wants, maybe even your personal life, whatever it is, not just the market, ask Bob. All right. So the market, as I said, doesn't care about your prediction or in this case, your preparation, right? Your pre-market analysis. Your real edge is not guessing the future. Right? Right. Yeah, we talked about it. Technical edge, emotional edge. This is not about guessing the future. Yes, Mark Douglas is saying the only thing you can do is take an educated guess, but it's still not like predicting the future. It's preparing for what's most likely being ready for both outcomes. That's what I want to say. So that is what we are doing. We are preparing ourselves to be ready for both outcomes or like multiple outcomes. So you're building up multiple scenarios through your day trading. Do you have a plan? Not just how to get to a specific zone or level or whatever it is that you're looking for? Do we have other plans, like maybe to the opposite direction, or a plan to exit the market? Anyway, it's the sabotage, I know. So manage your risk. Exactly. You can call it exactly on whatever you want to, just manage it. So what I realized is basically prediction is like feeding the ego, right? But preparation is actually what's going to feed the account, because that's how you're going to protect it. So prediction, I would say, why it kills the traders, right? Because it's, as I said, it's already an ego trap, right? It's an ego trap already. You know, if you're right, that feels good, but it's going to blind you, right? It's going to blind you in terms of analyzing the market. Okay. Are you trading live this hour? No, AK. I usually never take a trade in the lunch hour. When Methodical Man is here, just to troll him a little bit, I take a trade, but usually I end up on the losing end. So anyway, if you guys want to make real good money, you have to fade me when Methodical Man is here. Okay, anyway. So the one problem with the prediction, as I said, is the ego trap, right? There's another thing is locking your bias. Okay, you force your trades, for example, because you said it's going to go up. You're forcing yourself because of it's basically connected with your ego, right? Overconfidence as well. One of the things you size up, because your prediction that we are definitely going to go into that XYZ level, I don't know, 23,900, we're definitely going to go there. So what you're doing is basically having overconfidence. And this little guy here that sits on your shoulder and, you know, keeps telling you that push the button and it's going to go there. Don't worry. Is definitely going to go to your level. It's just something that puts you into an emotional roller coaster, right? It's really, the market goes against you and the tilt spiral begins already. You know him too well. Yeah. So, you know, basically, if we are only trying to predict, that's going to turn us into like pure gamblers, right? Preparing, though, you know, that can turn us into professionals. That's the goal, right? Now, where is this going? So anyway, what preparation looks like. We talked about this. It's very simple, right? Mark up your levels, right? Mark up those levels. Identify the supply, demand levels, prior day highs and lows, midnight level. I'm going to say it out. I don't care. At least you guys have a good day. Where's the VWAP? Okay, VWAP. The VWAP, right? The volume weighted average price indicator. Anyway, use it. Use a moving average. I don't care. It's up to you. Mark up your levels, the ones that you like to trade with the most. It could be a pivot point, whatever it is, okay? Preparation, basically knowing where the story could unfold, okay? That's preparation. Create scenarios, not forecast. So, as I told you guys, I mean, there was a scenario for me earlier. I explained it at the beginning of my session. So, I took this beautiful long trade, got out, and there was another scenario, like the market still didn't go there to tag into that supply zone. So there's a scenario, if I have like 3 confirmations, I can take a long position. Nice. I can also leave a runner, whatever it is. If it tries to go lower and breaks, I told you, like if we break below that 806, awesome. I'll be looking for relative equal lows down here, but most likely the 5-minute demand zone, but not on the 1 minute. I need 5-minute displacement because the distance is like 160 points and volume is not too big right now. So let's just say it's not the best. So obviously I'm not going to jump in on the 1 minute. I'm definitely needing a scenario on the 5 minute, maybe the 15 minute to jump into the trade. Tom, do you enter with limit or market orders? It depends. I would say 50-50. When I'm looking for a more precise risk to reward ratio because the range is a little bit tight or narrow, I might enter with the limit order to wait for a pullback or a retracement. But you know what? Basically, I realized that because we are reacting, I'm trying to react nowadays a little bit more than I should. I enter, I would say then 60% of the time with market orders. I'm trying to change it. Limit orders always giving me a better entry, always giving me a better risk to reward ratio. And by the way, just a small information piece there. Limit orders are going to help you. Yes, you might going to miss some opportunities. You might going to miss some setups, but those are going to help you to give you a proper risk to reward ratio, obviously better profits, etc., etc. All right. So you definitely need to create scenarios and not forecasts, right? If price breaks above this and this, then, long bias, or price rejects this, then short bias. So there's multiple ways to look at this. Cheater, never use a market order. It depends on, it's a personal trading style thing, but everybody, it's a subjective thing, as I wanted to say. Bob, I'm blessing you right now. You're blessed. Okay. You are. Stick around and find out. Exactly. So yes, it depends. It's a subjective thing. If I'm down on the 1 minute time frame and if I'm looking for a scalp trade, then most likely, I'm blessing you. Bless you. So if I'm on the 1 minute time frame looking for a scalp, 10 to 15 points, whatever, most likely I end up with the market order. I think you should full port everything right now. You know what? Let's do this. But first, let's drink something. I like this. Before you ask what I'm drinking, it's basically iced tea. All right. So vitamin, it's iced tea. I have another one. I was super thirsty. Another iced tea. Yeah. Is it sugar free? Yeah, it's sugar free. It has 0 on it. It's 0. Okay. So, you know what? This is for you guys, for my funded TV chat. Cheers. The more I drink from this, the better my prediction gets in trading. So, it's so fire. So, where was I? Yeah. So, preparations, right? Obviously, you do have to prepare your risk parameters, okay? This is actually super simple, right? No more ICT. We need to be, that's going to be in a different session. Whenever someone asks me anything, I'm going to use your slogan, stick around. Yeah, let's see how that works out in life for you. Let's go. So, what I'm trying to say, risk parameters preset, okay? Like we all know the usual questions, like how much you risk per trade, how much trade you take on a given day, all that such. Yeah, we all know that. But yeah, but decide the risk per trade. Seriously, I sit here around. Decide your risk per trade. Decide your maximum loss. Right? We talked about this. That is just. It sounds boring, but it's very important. So, also mental preparations. That's why the scorecard is helping you. We talked about the scorecard 2 times now, and we're going to talk about it 5 more times. And it might be the most important. So one thing I've learned from these Mark Douglas books, can you make a market go to 23,904? Hold on. I'm just going to make a phone call. Blue Horseshoe loves 23,903. All right. Thank you, guys. Make it so. Don't worry. It's happening. That's all I could do for you. So the mental preparations, what I wanted to say, except, okay, you don't know which scenario will play out, and accept the risk before you even put on the trade. If you make peace with the outcome, everything is so much more simple, right? Your confidence basically equals of being ready either way. Okay, is it going? I told them. So let's go. Pump it. This is not, as I said, for me, this is low probability conditions. I was kind of eyeballing with that 900. Even if someone jumped into a long trade here, let's just say if I would pull the trigger, which I'm not gonna, I would go for like 900, actually 899, whatever. 1-to-1 risk to reward ratio would be down there. Okay. So that's it. I would just leave room for the trade. What happened? Anyone got a win? I don't know. Anyway, so confidence is basically equals to being ready in either way. Okay. Anyway, let's just get this off for you. Yeah. So what I wanted to say is basically a predictor argues with the market, and we don't want to argue with the market, right? But the prepared trader is going to listen to it, and we got to listen to the market, metaphorically speaking. As I said, if I would be, if this would be the time of the day when I can sit down and look for a setup, I have to come up with I have to come here prepared. So my preparation would be to spot a specific level. And since this is the first presentation gap here, I wouldn't go short before this makes a down close candle below 806. That would be the short plan. And that's not even the entry. That's just me considering that the market could be going lower. Okay. That would be just me considering that the market could go down. All right. Until then, I have no entry. So even if I entered, for example, this is the 5-minute chart. Let's assume that using this 5-minute buy side imbalance, sell side inefficiency could be a good level to try to go for one more push to those 900s. Awesome. If that's the case, the plan is simple. I'm just going to wait until the market is just like I showed before, like if it closes below like 800, I don't know, 796, whatever. Until then, my job is easy. If I'm in the trade, I'm just going to wait, right? If I'm not in a trade, well, it's lunch hour. So if I'm not in a trade, oh man, tough decision, right? Tough decision. If I'm not in a trade, and this would be the first time to sit down and call an opportunity. The problem is with lunch hour, right? My problem is with the time here. As I said, I did lots of backtesting, lots. If the pullback would have happened sometime until 11-ish a.m. Eastern Standard, then I would have got into a long position. But if this would be the exact time and moment that I could sit down to my computer and, okay, let's just push it, I would not take this trade. This fair value gap is not enough for me. So there's only one scenario left, is to close below 806 and then maybe wait for a short. But that, as I said, and I cannot repeat that enough, just because if we're going to have a down close candle below 806, it's not going to be enough for a trade in itself. There are multiple confirmations. That's why I showed you guys the examples earlier in the beginning of the session, right? It doesn't matter. You can use, for example, indicators. I know many people are saying, oh, indicators. Yes, indicators always going to be laggy, always going to show results from the past. So again, if you're using a moving average crossover, a MACD, or if you're just using a specific candlestick formation, you can create your own entry model, by the way, but make sure in my personal opinion, to have at least like 3 different confirmations, like check marks, before you enter the position. Okay. Just because price went over or under on a specific moving average, or the VWAP, right? I know, I said it. So just because of that, it's not enough. Okay. You need to see the context. We talked about the context a few weeks ago, and we're going to circle back to the context again. So if you have a context, if you have your check marks, then yes, but not just because of a single cross or I don't know, just a single down close candle or whatever. There has to be, I think, at least 3 different or multiple confirmations. But anyway, that's just the. Did anybody win? I didn't win. Anyway, congratulations to the winners. I was carried away again on the storyline here. Congratulations. You know, this is for the winners. Cheers. Some iced tea. Oh, nice. Awesome. I love it. So, where was I? Oh yeah, the preparations. Okay. Obviously, it all comes down to the psychology aspect. We all know it. Preparation actually kills the FOMO. I don't know if you guys noticed it. You already know what you are waiting for, right? You are going to wait for your trade setup. It kills the FOMO. It technically, it's one of the best ways to kill the FOMO. Preparations. Game plan, by the way. You can call it game plan too, right? Preparation builds confidence. Woohoo! Yeah, confidence. That's what we need. You have a plan for each scenario. So the market obviously can do crazy things and dirty things, but you're going to have a plan for each scenario. There's nothing better. I mean, obviously, there are multiple good things to build confidence, but I see. Okay. I see T. Oh my God. Okay. So, preparations are definitely building up the confidence. Okay. You have a plan for each scenario. Obviously, if the market throws you a curveball, hey, Volkspart, good to see you. Then you already know what to do. Okay. I call them again. I try to actually, it's not going to work. And also preparation is removing the tilt as well. So if A doesn't happen, it's super simple. Did you ever talk? I mean, it's very simple. Removing the tilt with preparation. If scenario A doesn't happen, you're just going to calmly wait for scenario B. That's what we're doing. You know, because this trade setup might not have worked out. Awesome. Great. I'm not going to do anything here. I'm just going to wait maybe for the market to take the elevator down. Otherwise, I'm not going to do anything. And it's technically protecting you from the tilt. Okay. If A doesn't happen, you just wait for B. And of course, preparation is shrinking the pressure too, right? Because you're not in the need to force the trade. Yes, losses are part of the game, but you're not going to force it. Okay? You're not going to force it. Preparation is basically patience in disguise, right? Yeah, I keep hearing that, but hey, I'm not patient enough. I need to have more patience. I need to have more patience because I always want to enter. Cool. Start by the preparations, which is basically pre-market analysis, game plan, plan A, plan B. Okay. And it's going to make it much easier to wait for that specific setup. Fish lips, hey there. And Verbon is here in the flesh. Good to see you. Salted. Sort of. Yeah. Sometimes, I meditate, but not as much as I would like to. So this is the kind of thing that we need to understand, right? There are some winners again. Okay, congratulations. I didn't even see anything. It was a sneaky code or anyway. So obviously it's easy to apply in trading. Preparations is just have to be a part of your routine. Okay. of your daily routine. Okay, preparations, higher time frame bias, key levels, and write down maybe 2 or 3 scenarios. I mean, you don't specifically have to write it down, but you don't need more than 2 or 3 scenarios when you're doing your preparations or pre-analysis when you sit down to trade. Okay. Roman, did you win? Congratulations. Awesome. W's for Roman. Awesome. Oh. Let's go, everyone. Oh my God. Thank you, Roman. Congratulations. Well, what is the code? Magnet 50. Come on. 50 free I'm gonna go to MyFundedFutures and get a code and get it. I'm gonna get it. Let me open up my phone. Okay. What's the code again? I hope I'm still not too late. Okay, let me open up the website. Okay, I have to open up the website. So, what was the code? I forgot. Magnet 50. All right. Am I too late? Man, I knew it. I'm too late. Anyway. Oh no, it's gone. Anyone got it? I hope you got. Come on, I need to see some winners in the chat. Oh, I need to keep the website. Oh, I need to have it opened up. Man, I was slow. Got it, Luis. Congratulations. W's. Nice. MG, congrats. I don't know who else got it, but congratulations to the winners. Okay, still left with 3 minutes. That's an eternity, right? I know everybody's waiting for Matt. I know. But anyway, pre-market routine. Okay, basically part of preparations. Okay, high time frame bias, key levels, 2 or 3 scenarios. You don't need more. Okay, and during the market hours, it's super easy. Match what price is doing with your prepared scenarios. Okay, obviously, you just have to do the reading of the narrative. Oh, sunglass. Okay, I have to be prepared. Now this is the preparation. Okay, daily routine. I have to prepare myself for Matt. So I'm gonna be putting these on. I still have a few more. I can't read the screen in the sunglass. So anyway, obviously. And by the way, preparations also, it has to do something with the post-market conditions as well, like journal, right? Journaling, did I execute what I prepared? Okay. Did I predict, the trade? Was my analysis correct? Scorecard, we talked about this last week. Scorecard. The routine, the scorecard routine. So score yourself on the process. I'm going to actually create an awesome scorecard for you guys to download, okay? Your job isn't to know the future, okay? It's to be ready when the future reveals itself. Oh, yeah. So stop trying to be a fortune teller, okay? Preparation makes trading boring, and boring makes us profitable, okay? And obviously, predictors lose by being, fighting with the market. But, prepared traders win by being ready with their accounts for both scenarios or even multiple scenarios, okay? Predicting makes you look smart, but preparing makes you rich. Or at least it makes you money, right? Yeah, so this was my takeaway on this. And by the way, I only have like 30 seconds. I think this was awesome to talk about, right? I hope you guys enjoyed it. And I got to be prepared, because we were talking about preparations. Here's my preparations. I love being here at MyFunded TV. I so much love the vibes and everything. I hear it. I knew it. One more sip of iced tea. We're doing it. The party. I love those fancy. Nice shades. Okay, everybody, louder. I can't hear you guys. Come on.
I just wish I could actually. I wish I could actually see things with the sunglasses on. Tom knows because he's got like the key lights and stuff. With the sunglasses on, everything is like so dark. You really actually can't. I can't actually see anything.
Honestly, I can't see anything as well. Nothing. I mean, everything is blurry. So, but who cares?
I know. How's your weekend, man?
Everything was awesome. I slept a lot, relaxed, recharged, and right now I'm drinking ICT, iced tea, basically.
ICT? Is that ICT? Yeah.
Anyway, yeah. So, how was your weekend? What's happening?
Weekend's pretty good, man. I did like a whole lot of nothing.
Stop. I saw a picture somewhere about some delicious food you post out there. What was that?
The steaks that I made. Yeah. So I grilled I'll show you guys a picture if you guys are steak fans.
I saw the picture. I was like, okay, we're gonna go shopping. We gotta go do something similar. Because I got so hungry when I saw that picture. I was like, oh my God, one more reason to go to Texas. You see that, guys?
Here.
Look at that.
How'd I do? Chat, vote on the steak. Did it do okay?
I think
can grill
it did.
a pretty good steak. Yeah.
Oh man, I'm hungry. I'm super hungry right now. I need to eat something.
And somebody says, "What about the inside?" And they were like, "It only matters what the inside looks like." So I snagged a picture of it, perfectly juicy, medium rare, nice and round the inside. The way that everybody likes it. So that was the weekend.
Nice. Well, it's always that's actually awesome. I love to eat all these kind of foods, so I'm a food addict basically. But anyway,
nice.
And how was trading today?
Trading's good. I think today was pretty decent. I'm up some accounts. I'm in a couple of trades now that they're down, but I'm trying to take a long setup like right here and I'm thinking about getting out. Actually, I am thinking about getting out of it for now. So let me actually going to close that out. My signal just went bad. Things have been pretty decent. I was kind of green across the board. I have 3 accounts that are long right now. That one I'm closing. 2 of them I'm going to hold through this chop and grab a dip probably at yesterday's close. That's it. How'd you do today?
I was kind of went crazy at the Sunday open basically, and on gold, and I was technically trying to scalp the gap, and I was very successful with it. So overall, I'm up about a little bit more than $3,000 today. So I'm very happy about it. Nice. And majority of this was gold, but it was good. So I wasn't even forcing anything special here on the AM session too much. London was also a good trade in gold. But I thought that this is going to go higher, but it seems like ES is not pushing it so much. So that is it.
No, not really. Yeah, it's not really that good today.
Yeah. So anyway, I think I'm going to say goodbye now, chat. So I'll be back tomorrow. Thank you again for the session. This was awesome. I really enjoyed it. And Matt, as usually, I wish you a great session and positive vibes and everything. And because I would love to stay here for another 20 minutes at least, but I have to run an errand quickly. So anyway, all the best, and I'll be back tomorrow.
We should do it. We should do it. That brings me a good idea. Before you leave,
I want it, by the way. So everybody, if you guys want to just put some W's, I want to hang around here. Matt is going to teach me how to trade, and I want to listen. No, really, no. I want to listen. I want it. So, we're going to do it. We're going to do it. Absolutely.
It would be cool to have like a couple of like people, and then we're like going through trades together and just chilling, and that'd be kind of fun.
Yeah, absolutely.
We probably have a good idea for the afternoon show. We got to think about this. We got to pass this to the heads.
We're gonna pass it to management, and we'll see. If you guys don't see me, you know what happened. So anyway, thanks again, Matt, and have an awesome session. And chat, you guys are awesome. See you guys tomorrow. All right.
Awesome.
Cheers.
Thanks, Tom. Appreciate you, man. All right. I think that'd be kind of cool, right? To get some guests on the afternoon show. We're gonna actually start doing that. I know I have a couple of teasers for y'all because I know sometime, I don't know if it's this week or next week, but sometime soon I've been advised that we're gonna get Sean Sawyer back here on my segment. So Sean and I will be able to talk, but it'd be like the best trading psychology talk you guys ever had. You put Sean and me together. We've worked together for many years on various podcasts and space and stuff. That'd be a hella good stream, and we would give you guys all the tidbits on psych that you guys could ever want. That'd be kind of cool. So I know that's coming. We have two people on the screen at the same time chatting, and while these afternoon shows have been like Tom's show and my show and kind of like solo shows, it'd be kind of cool of us to get some guests in there for you guys. So probably think we're working that. We need guests in Matt's live. That'd be kind of cool. I could be like, talk show host. I can interview people. So how has your trading journey been? Tell us about it. I think I'd be a pretty good host. Like talking to people and asking them questions and letting them feel their responses. I used to host some Twitter spaces. I got some practice doing that. That'd be really fun. I think that would be fun. I don't know. What do you guys think, chat? Pretty good? Limited. Oh my God, there's a form. Form 1 out of 2 right off the bat. There's a form, you guys. Go fill it out. Go fill that bad boy out. What's up, guys? All right. I don't even know what it's for, but let me click on it and see. Looks like they're doing 10 50K scale accounts. Wow. 1 out of 2. We're going to do 2 giveaways today. 2 huge giveaways. Let me actually get that. So what do you guys, y'all saw the stake, by the way. So somebody said 2 out of 10. Or sorry, 2 out of 2. And then somebody said 8 out of 10. Not bad, not bad. Now, again, I'm not going to lie. I'm pretty good at grilling tomahawks. I've been cooking steaks almost my entire life. And I have a good technique. I want to know what you guys think about my technique. Let me teach it to you. Hold on. 2 giveaways. Okay, here's my technique. One second here. Okay, so my technique is as follows. What I do, where did I check up? What I do is I dry brine the steak, number 1. Tomahawk, 2-inch thick, baby. No thinner than that. Tomahawk is a 10 out of 10, even if you don't cook it. Tastes good raw, you know what I mean? All right. That crust wasn't looking too crusty. Oh, no. That crust was perfect. It was as crusty as you get. Now, I do a secret trick. You got to look on the side. Let me see if the color was different. The entire thing is crust. As a matter of fact, the entire thing is so glossy. Let me zoom out so you can zoom in so you can see it. I think I make it bigger. The entire thing is solid crust. It's almost like rock candy. It's just like a solid crust because I do it on a flat top. So you can see like the little lines right here where the crust itself was sort of like cracking. So it's a thick little crust. Now I don't cook it too deep into the steak. I get the sear on the reverse sear and that's it. So you can see that the ring, if you look here on the edge, the brownness is just a tiny little bit. The rest of it's pink. So I get like maybe like 1/4 of an inch of brownness and then the rest is pink in the middle. So I try to get like that perfect balance of just enough of that umami from the crust. So here's the trick, right? Dry brine, especially a 2-inch thick tomahawk. You get kosher salt and you cover that thing. You basically get a handful of salt and you rub it into the steak on all sides and that's it. Let it sit in the fridge pretty much overnight. After about an hour, you'll start to see that the salt is dissolving in a pool of the steak's own liquid sitting on the top. So essentially, the salt draws the moisture out, which dissolves the salt, which sinks back in. So then you get like salt, basically water brining the meat throughout, kind of on the edges, not too much in the center. Dry brine's the way to go. As a matter of fact, I only dry brine poultry now too. I used to wet brine chicken, like put chicken in some salt water with ice. I only now wet brine a turkey and that's it. Because turkey is so thick. But now when I cook chicken, I also dry brine chicken the same way. So anyways, that's what I did. Dry brine that steak, let it sit overnight, take it out, throw it in the oven, cook it to about 110 for medium, pull it out, reverse sear, 2 minutes on the side, blazing hot skillet. I take a little bit on a again, 130 is for medium rare, but you want to pull out of the oven at 110. While it's sitting, it'll cook to about 115 on its own. And then on tomahawk, there's a side of the steak where there's a big chunky piece of fat. I usually cut that off so I can sear the side of the steak and actually use that fat to sear the steak in. So I take a little bit of canola oil and I toss that fat in it and let it dissolve a little bit. And then once most of that fat renders off, then I have a nice like juicy layer of fat to cook the steak in. And I grab some gloves. I hold the steak by the bone. I put 2 minutes on each side. Then I do the edges. Boom, you're done. Then I slow baste in garlic, rosemary, butter. Basically, you melt the butter, let the butter liquefy, turn it on very low, and then scoop the butter over it instead of cooking the steak further. And if you do that right, 110 out of the oven, let it cook to 115 on the oven, sitting there, throw it on the skillet, gets it right about 120, 125, and let the steak rest. It'll get right at 130 just in time. This is the art form of temperatures to cook a 2-inch tomahawk, man. But I've been doing it for a while. Pretty good. So I cook it on a flat top grill outside. So no, somebody said no seed oil. Yeah, you don't have to use canola. Any kind of oil will do. Avocado oil or whatever. I usually try to use, if the steak has a big chunk of fat on it, I'll usually use the steak's own fat. So for the tomahawk, I cut off all the fat trimmings around the fatter edge on the opposite of the bone side. And then I use that to cook the steak in, baby. Oh, it's so good. Oh, it's so good. Let me show you last part. Because this was from Friday because Tom was asking what I was doing. So, yeah, let me show you which part. Let's see. But that's what I did on Friday. So this guy right here, so the bones on this side, right here, there's usually a big chunky piece of fat. So I slice it off right there and I cook it. And that's the fat I use to get the sear on it with. Oh yeah. And I use I have a Blackstone, which is like the best thing I've ever. Does anybody here, any of you guys have a Blackstone? Guys or girls have a Blackstone griddle? By far, my favorite things I've ever bought. It was like $200, man. And I get so much use out of that thing. It's so good, man. Because you get a sear on that steak. It's just like a perfect flat. Oh, dude, so good. Blackstones, you guys have them? Y'all love it? Oh, they're so good, right? This is my first year ever having one. And I'm absolutely love it, man. It gets so much use out of it. But that was my first time ever doing a tomahawk on the griddle itself, which is good. Normally I'll do like a skillet sear, but tomahawks are really big, so you can't really fit it in a skillet with the bone on. So I used to use like just a regular grill, but this time I did yeah. So lunch money with Matt. We're talking lunch today. Get a George Foreman grill that you can that you could step on, like Michael Scott. Oh, that's so funny. Y'all are hilarious. Okay. You love your steaks, burnt charcoal, Blackstone, and green egg, top tier patio cooking. Green eggs are pretty good too. You got yours right next to the smoker? Heck yeah. We're redoing our backyard, so I'm hopefully gonna get some space after that to have some space to put a smoker. So yeah, Blackstone's great for fried rice, chicken, fajitas. I made pancakes on mine one time. So good, so good. Yeah, tomahawk is massive if the bone just hangs over the edge of the skillet. But you can't get the side of the steak that's nearest to the bone doesn't touch the skillet. So that's why I hate it. Use propane. Use propane and propane accessories. Oh, damn it, Bobby. There you go. There you go. Anyways, welcome to Lunch Money with Matt. Okay, so today all my trades were long. Pretty much easy. I split up my risk out the door. The first thing I did was long in the Nasdaq and long in the S&P. Right out the door, I longed. My Nasdaqs went right up to my DD band, which I closed out. That's some of the 1400s and stuff you saw here. We dipped again. Pardon me. I grabbed a second trade in Nasdaq and S&P. I split my risk up a little bit. The S&P's made a little bit. The Nasdaq's made a lot more. So Nasdaq, I made that same trade a second time and closed out. And then I pulled back. And then earlier on the show, I was like, about here, I started trying to trade S&P at half gap with positive res. And then it went negative again, or sorry, at open. I started grabbing some longs right here, I believe. Somewhere in here, either here or here. I grabbed some longs and I just closed out. So when I started pulling back with negative rest, this tells me we're filling the gap. So which is absolutely fine. Gap fill is okay. What I think is right here on that gap fill is about where we're going to bottom out for the day and continue to rally. So that's about it, I think, for today. So we should be all right here. So when we get to about here at 64.90, I'm going to jump back in on this trade. So that's basically it. Longing out the door, all the greater market signals are bullish. We always talk about these today. I had my DD ratio was 0.76, 76% of the market cap, bullish. S&P, bull long up, setup, perfect. We're above monthly hedge pressure, which is way down here, bullish. Bullish, 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 man. Everything was great. Typically at the open, the algo shows me that the open trade is typically the smarter of the two trades, as long as I have my resilience confluence to go with it. Since I clearly don't, the algorithm says this is now resistance rather than support, which is why I started closing my trade out a little bit ago. Earlier today, this said support, and then we lose the confluence here as stocks are filling their gaps as so. So now we're going to say that today we're going to go right back down to 64.90, I feel. So with that being said, today's stocks that were looking okay, NVIDIA had a really nice setup. NVIDIA had bull zone support, right? A lot of the major tech stocks were looking okay. Apple was sort of like not really bullish, not really bearish. It's sort of choppy in the range. So Apple's played hedge to hedge, but Apple's now selling off pretty hard. So we are getting some movement on the tech side to pull back a little bit. Not everything's looking peachy. Amazon rallied and started pulling back. Microsoft rallied and started pulling back. So the big tech that was moving is starting to kind of pull back a little tiny bit. Now, why are we not just rallying through the moon? Well, this is a big news week, you guys. Somebody said goat Matt because of the trades or because of the stakes. I like to think I'm a better cook than a trader, but that says a lot because I think I'm a pretty good trader. But anywho, IDOC is also a really good cook. She's actually like really, really good. She made some butter chicken 2 days ago. So we made Indian food for dinner, which is her first time ever doing it. And it was good. Okay. Anyways, back to today. We have PPI coming out Wednesday morning, CPI coming out Thursday morning, and then the Michigan numbers coming out Friday morning. This is inflation city, baby. So we're going to get all the good stuff coming out each of these mornings. Now PPI was really bad last time, which is, again, they'll give you a little quickie little lesson. Here's your 5-minute fundamentals with Matt. We need like a little catchy song for that. 5-minute fundamentals with Matt. Okay. PPI month over month. That's not the one I wanted. Year over year. Okay. Year over year, right? PPI had a big bump up. This is finally when the producers are starting to raise their prices, right? The tariffs have come in. We've seen sort of like this drawback in PPI, which is having the Fed say, we weren't seeing. Now, again, Jackson Hole changed his narrative, right? Powell did. Before Jackson Hole, the commentary was, well, we're not really seeing prices pass through to the consumer as much. And that was on the producer's side. This is the producer's index. Producer's price has been coming down since January. That's pretty cool. They've been eating the cost, and it's been nuts. Oh my God, they're not doing it anymore now. What the heck? Now we're back up above 3, and it's probably going to get worse. It's probably going to be up here. So now the producers have said, you know what? We can't do it anymore. We're going to pass the costs on to everyone else. Okay, well, that kind of sucks. Now, producers sell to wholesale and to retail, not to you. Those people sell to you. And that's where the CPI comes in. That's the prices from your perspective, right? The PPI is the prices from the perspective of the wholesaler, what they're paying for stuff. Now, the price only gets bigger. Remember, you sell something, the rule of thumb is it doubles each step. So if you sell it to $1 wholesale, then it's $2 to retail, then it's $4 for you, right? So at some point, your prices should likely go up if wholesale prices are going up, right? So what's going to happen here with the PPI jumping up really high? The CPI eventually is going to jump up higher as well. People in the middle, their margins are pretty much set. They can't afford to take a hit. So no wholesaler is going to be like, oh, that's okay, we'll eat the cost. And nobody's going to really choose to do that. So the CPI, which has just kind of been moving a little bit, is slated to move a whole lot down the road. Now, the reason there's a delay, as you guys don't understand, this is 5 minutes with Matt, is the following. There's a buffer of inventory. The inventory is the difference between PPI and CPI. CPI is you buying let's make up something, a TV at Walmart, okay? And the TV at Walmart is $2,000. And Walmart has set that $2,000 because they bought it at $1,000 from the wholesaler, like up ahead of the chain. And they've got 20 of those TVs sitting there that they bought at $1,000 that they can sell at $2,000 to get their margins. And as soon as they eat through that and they order another lot of inventory, round 2, as fast as they can clear this out, then they got to order a little bit more. And then they order a little bit more. And as PPI said, it went up. Maybe those TVs are going to be sold at $2,000. So Walmart's going to have to raise their prices at $4,000. But the difference between when you see the original price and the next price is the rate at which this inventory gets burned through. And they got to put in another bulk order to the wholesaler, right? To give them, hey guys, we need like 20 more TVs. Well, prices went up like another $1,000. Oh, damn. Well, I guess we're going to raise our prices up too. And that's what you're experiencing. So when PPI goes up, it's almost guaranteed that CPI will also go up. And there's your 5 minutes with Matt, right? So we can expect CPI to go up and PPI to go up as well. Well, we don't know when CPI is going to go up because each of those products have that different dynamic in the logistics, right? All the things being considered in PPI, there's going to be a lag time. Is it 1 month, 2 months, 3 months, 6 months, right? On average, stores, let's see if you guys know a little bit about logistics. What's the average amount of inventory, or how often should a retailer expect to turn over its inventory? Anybody here that runs a storefront or a business will understand there's a pretty much a rule of thumb on how quickly you want your inventory to turn over. What, do y'all know the rule of thumb? Is any business owners in here that run stores? About 3 to 4 months. That's it. Yeah, 90 days. That's the rule of thumb. You want to turn through your inventory about 90 days. That's correct. That's about as far out as, if you have something that's sitting longer than 90 days, then you're not turning it over fast enough or you're buying too much of it, right? So that's about what you're looking for. About 3 months. Yeah. So in 3 months is likely the range at which CPI is expected to feel the full effect of the PPI. Granted that all the price gets passed through from the middle to the retail side. So, and the next CPI or the one after it is probably when we're going to see the big bump. Now, the question is, Wall Street is anticipating that. Do you guys believe that that's going to cause the market to sell off, or are we going to be traders and get ahead of this and say that's what caused it to already sell off? We already were trying to price in the problems here, and now it's already priced in. You know what I'm saying? So the question becomes, do we think the CPI is going to be huge? And the answer is, I think it is going to be. But do I think that's going to cause this to happen? As Wall Street already knows this is coming, anybody with 2 brain cells left in Wall Street are probably going to be doing the same assessment. Okay, CPI is probably going to be bad. Let's start selling out of stuff and rotating into something that's a little safer. They're not going to wait for the CPI to come out. They're going to get ahead of that, as traders are smart enough to see that ahead of time. And I think a lot of this selling had to do with a little bit of that and a little bit of the fear that the higher inflation was going to prevent the Fed from doing anything. We said, well, the Fed's not going to cut rates anymore because inflation is going to go up. And we see that it's going up. Now the PPI finally revealed it. Shit, the CPI is going to go up now. Now the Fed's not going to cut rates. However, in Jackson Hole, Powell came through and said, we changed our mind. We're going to cut rates. Probably don't even really care about inflation anymore. Inflation is only temporary. It's probably only going to last for a couple of years. It's not really that big of a deal. Instead, we're going to save the labor market. We're going to cut rates. And so now the people that were rolling out because they expected big CPI, as traders always get ahead of the curve, people are rolling back in because now traders are voting in. There's like a 20% chance we get a 50 basis point cut. Not only was before Jackson Hole, we were going to get no basis point cut. Most people are voting on no rate cuts. If maybe there'd be 125 if we got it. Now people are debating, is it 25 or 50? Because Powell seems to think that inflation's just temporary. He's not wrong. Eventually, the tariff inflation won't get any worse than 5%. It might settle down as companies become more efficient. Do they still want to cut rates to keep companies' stock prices higher and things better and keep people from getting laid off? I think that's the goal. So now the question is, the week after, when we have the Fed coming through, are we going to get the rate cut? And people are now pricing the rate cut ahead of time. So the market's down because of PPI, CPI. It's up because of rate cut, because the job market sucks. And the worse the job market data is, which last job market data, we got the non-farms, were absolute dog shit, right? The crappy job data, the market goes through the roof. Even with good jobs, and we did go through the roof and sell off, but still, we're still maintaining the rally because people understand the worse the job market looks, it's even more likely Powell's going to come through with a rate cut to save it. As he made it expressed it very clearly at Jackson Hole, our dual mandate is what we care about, and well, the job market's the most important part of it now. You kidding me? This is completely blew my mind. Jackson Hole is almost always a non-event. Very rarely is Powell using that to drop a bombshell. And he literally switched the narrative, went 180 on us, right? So it's crazy where we are here. It's crazy. Yeah. Job market is absolute garbage right now. So, let's go ahead. And you guys want to see what the probabilities are. This is something I'll give you guys some tips. Anytime you come here, I'll tell you, I'm going to give you guys the raw tips that you need as a trader. We're going to go in raw here. Okay. CME Fed Watch. Google this. FEDWATCH. CME, Chicago Mercantile Exchange. CME Fed Watch. And you can actually see how traders are voting in real time. As you see, it's almost a guarantee that on the September 17th meeting, we get a rate cut. Everyone is pricing in a rate cut. We're at 425 to 50. 88% of people think, or 88% chance that we're going to get 125 point cut. 11% chance we get a 50 basis point cut, right? So it's good to watch this as a trader, and you can see this as this updates. This chart doesn't update in real time, but it will update when you refresh it. And you'll see that when the news comes out, you can see these probabilities shift around. I can guarantee you when the CPI comes out, these numbers are going to move around a lot. When the PPI comes out pretty bad and the CPI comes out pretty bad, normally these probabilities will shift pretty drastically. But I think with the Jackson Hole comments is that people are expecting CPI to be bad and still don't think that's going to affect the decision on having a rate cut. So now we can guess 2 weeks out, there's a 100% chance we're going to get a cut. And the question is, how much of one? I'd like to say it's going to be 50%. I'm in the smaller probability now. As Powell is expressly stating very openly that they want to save the jobs market. The jobs market is garbage. So 25 ain't enough to do it. 50 is the way to go. They got to go pretty aggressive on this. If that's the case, 50 points might actually be it, or 225 point cuts back to back. But I think we'll get 50 this year, at least 50. So again, as this point of the stream is, what we're trying to do here is do what Wall Street does, right? It's one thing to see the news and be like, oh, it's bad, let me long it. But it's not how Wall Street works, right? Wall Street does what we're doing. They try to get ahead of it and think about it now before it happens. And they're already pricing it in. Like, why is the market not crashing the last month? Well, because we're going to get 50 basis point cut probably. People are already buying the dip when they got it all last month. Every dip, people bought it back up. People are positioning for it already. That was the low to buy on. That's when the smart traders get in. And people that think that the CPI is going to be bad, inflation is going to be bad, and that we might not get a rate cut, already sold at the high this month. Wall Street is very good at positioning before the news and selling on the news. Usually people act before the news and then sell on the news if they need to, or exit on the news. So that's what we're trying to do, right? And by the way, we are 700 subscribers away from 50K here at MyFundedTV. I'm so thrilled to see the growth here. If you guys can do me a favor, every time you like the stream, a new G-Gen gets the impression and it shows up on their feed. Let's attract all the rest of our G-Gen friends out there who haven't found us yet to come hang out with us, the Lunchtime G-Gen Squad. So hit that like button really quick if you guys like it. Thumbs up across the board. Costs nothing to do so. Think of it as like tipping your waiter, except that it's free. DGens Unite. We get people here in the afternoon. So appreciate you guys for the support. If we get 50K, that'd be incredible. We hit 40K last week. So on my personal stream, we got 40K. So thank you guys for that as well. It's been crazy. Lunchtime DGen squad. Let's go. All right. So anywho, kind of waiting for things to stabilize. And today I have been contemplating longing from here. I don't think we're selling off, but I do think as good as it gets today, if the market does fill the gap on this resistance play, I think that that is a long setup to continue to push higher to close out the day. I really do think that's what we do get. I'm kind of going to wait for that now. And that's it. So the day trade and the lunchtime today is somewhat conflicting signals. Everything's bullish, but we do have a gap fill signal here, which is the warning sign. Typically, when this white line is less than 0, then the index prefers to be down here at the bottom side of this dash line. So basically, this is where SPY closed yesterday, and this is where it opened today. So relative, converting it to futures, this was the S&P gap up basically today via SPY. And so when this white line is less than 0, it means the majority of the market cap of stocks have gapped up and filled their gap. That's what that's telling you. Most of the stocks have filled their gap. So the probability is much higher that the S&P is actually going lower if it were tracking the stocks than here. How much higher? Well, we attribute these probabilities closer to more like 40% and 60% through gap fills. It's not really like super A+ setup. We call this one a B setup. And because of that, my trading instruction is I always trade small. There's an S there for small. So I always trade small inside of this anyways, because it's not really like 80, 90, 100% chance index tracking the stocks. So there could be delays and things with index separates a little bit. But the idea is I can choose to sit out when I have a conflicting signal, which says that the probability is much higher that we actually go down rather than up. So I'm going to choose to sit out for now and let it go down. And then because I'm bullish on the bigger scale, utilize that as my dip to long from to bet that things get better for the day. So I utilize that as sort of my entry mechanism. I have this really good gap fill predictor. Resilience is what it actually is. This is a gap fill predictor. It's an aggregate of market cap weighted aggregate of the stocks, which is so cool. It just tells me if the white line is less than 0, then the index wants to be here. If the white line is above 0, then the index wants to be above here. And we have one for both S&P and NASDAQ. So when you look at both of them side by side, S&P is sort of overpriced relative to the stocks. And NASDAQ itself is sort of up above here with negative res. So NASDAQ could very easily fall really quickly to here. Now down in here, I've got A+ setups all across the board. Liquidity pockets, you guys know, are my bread and butter. So I'm going to smash these pretty hard when it gets much lower down here. I'm excited about that. Anywho. You guys and your names in chat. That's so funny. How to participate in the giveaway? Oh, you just got to be here. Every once in a while, like I said, the giveaway is pretty simple. You just got to be here. The one I tweeted about. All you do is be here and they'll make the announcement. In chat sometimes they'll post it on the screen. The point is you got to be paying attention. If you pay attention, you can enter. Usually they'll give you a link for something to click on the mods will post it. So that's how you enter the giveaways. Anywho's. All right. So today, I'm pretty much happy with today's trading performance. I don't think we're crashing out. I think my puts are going to expire worthless, which is great because I do love a bull market. But like I said, I still got my puts for a couple more weeks in case this thing dies out. And I'm covered. I'm going to keep buying the dip and buying the dip and buying the dip and got puts in case it doesn't pay out. You like the analysis? Thank you, Hypercube. I tend to think fundamentals are extremely boring, dude. As a trader, I think that they are really boring. And I have ADHD, so I hate listening to people talk about fundamentals. This is too much numbers, too much stuff swirling around your head. And really trading doesn't necessarily even listen to the fundamentals. So there's a cold hard fact about it, is that Wall Street will price something in ahead of time. If you can guess what you think it's going to be, you're going to bet on it as soon as you can guess. This is the rule of thumb of Wall Street. Second rule of thumb of Wall Street is nobody is entering on the news. The market blasting on the news is always algorithmic bullshit. It's not to be trusted. So there's no way you're ever going to be able to guess, is good news going to make the market rally or sell off? Some good news will, some bad news will make the market sell off. because it's a surprise. That's what makes it move. But usually expected good news and expected bad news, it is a coin flip. If there ever was a guess, it's 50-50 which way it ends up at the end of the day. There's always people that entered and traded right before the news. And when the news comes out, it's up to them to decide, do I take profit or do I hold on? And that's usually pretty random. So today and this week, we have all kind of positioning for this random event. Tuesday, Wednesday, Thursday, and Friday. PPI, CPI, Michigan numbers, man. So I try to at least like make it to where you guys can learn more. The average trader doesn't put this much thought into it. But I try to make it where at least you can learn as much as you can, simply and more easy to understand. I kind of explain it like in street terms. I'm not an economist. I'm an engineer. So I just piece it together and try to explain it to where I explain it to somebody that's never traded before. That way it's easier to understand. And that way you guys can have a head start. And that's what we try to do here. Give y'all some decent explanations as to what's going on in this crazy market without chewing on like, you know, textbooks worth of numbers and data. And it's like surface level stuff. As a trader, you just need to make a good decision. You know, is the news good? Is it bad? Can we predict it ahead of time? And a lot of times with the Fed's motivations, you can start to predict what they're going to do because Jay Powell's pretty transparent. He told you at Jackson Hole, we no longer care about inflation. So here's what I'm going to tell you. CPI, PPI, to you guys, let's take a guess. If the CPI comes out bad, do you think Wall Street's going to sell off the market? That's the question. Let's think like, let me challenge you as a trader. The CPI is going to come out bad. Do you think the market's going to sell off? Think it's going to absolutely dump and crash? CPI came out at 4%. Yeah, buy the dip, right? Because that's what I think everybody in Wall Street is thinking. Yeah. If it does dip, it's going to get bought up because people want to get in low for the rate cuts. Powell told you it's not that important. So see, now you're as a trader, that's what you have to do. If you haven't really thought of it like this, now you guys are getting a step ahead. Now, this isn't investment advice. This is just asking you guys what y'all think. But now you can kind of see as an example what a real trader is starting to do. I'm not saying, oh God, the CPI is bad, market dumps, let me jump in on the short. No, let me take 2 steps back and above that and say, people have been betting on a rate cut, and Powell says inflation's temporary. This is a temporary problem. Therefore, it's a temporary dip. If the market dumps on CPI, I'm looking for dips to buy because of the rate cuts, right? So as a trader, that's what you guys have to do as well. It might sound like a little bit extra homework, but I promise you're not looking for candles and patterns this moment in time. The really smart traders in Wall Street are doing this exact thing, trying to think a step or two ahead. Being first is everything. So CPI hasn't even come out, and I'm already ready to buy the dip. I don't care what it says. I'm ready to long at the end of CPI. You know why? Because Fed's going to cut rates the week after with the 20% chance that we probably get 50 basis points. As a matter of fact, I'd even guess if CPI came out even worse, the Fed is more likely to cut rates because it makes the problem even bigger. They've expressed an urgency in the markets right now. The Jackson Hole 180 tells me urgency. We need to fix the problem now. Things are getting really bad. They're going to get really bad if we don't do something now. So therefore, the worse things look, the faster and more impactful the Fed's decision is going to be. Therefore, I want that CPI to be bad, baby. I want it to be bad. And I want it to dip, brother. And I'm going to get in. And I'm going to buy that dip. You see what I'm saying? Powell's not going to 180. Oh, my bad. CPI is worse than we thought. Okay. JK, LOL. Yeah. Fuck the job market. We ain't cutting rates. Sayonara. You know what I'm saying? So this is kind of like the way I think leading into that stuff. I'm never walking into that seeing, oh, what was the news? Okay, should I long now? I already know I'm longing. I already know I'm buying the dip. And if the market dies, for some reason it dies, I've got puts. So we're good. And I'm buying the dip in futures. So I'm covered in every case, in every scenario. That PPI is going to come out probably high 3s, just like we thought. CPI might come in mid 3s, high 3s. We don't know. We don't know the delay effect of when that day is going to come out. But I do know that one thing that's going to change significantly is I think if that PPI CPI combo looks like trash, I'm betting bad news is good news. So come back and tell me if I'm wrong. But I think if the CPI comes out worse than expected, people are going to bet that Powell's going to act even faster. And I think that's why the market's going to dip and freaking rip. Okay. So as a trader, remember, you might say, I like to watch this guy, Matt. He has some good indicators, some good technicals or whatever. Or maybe you might even say, I like Matt. He's a pretty decent trader. But you might want to know what does separate me from like maybe a new trader. Like what do I do differently than new traders don't do? And it's this. It's exactly this. And I could be 100% wrong with my guess. But do you see that my trade isn't, well, the candle moved up on good news, so maybe I should buy it. That's not my trade. My trade is 3 days in advance. I've justified what I'm going to do 3 days in advance. Now I'm just waiting for it to happen, right? So as a good trader, that's what you want to aspire to do. Now, I didn't go to school for economics, right? I didn't learn any of this stuff from anything other than the streets, like learning it through trading, learning it by reading my market calendar. This is how I learned fundamentals as much as I need to. I only enough to really act on. As I use the economic calendar, and I love the one investing. It's free. I'm not like an affiliate or anything, so I'm not like repping it. It's free. I love it. And then you can click on each of these things, and it takes you down a rabbit hole. It explains what they are. And then you can keep diving further and further and further and teach yourself each thing that's important. You want to know if it's important, they give you a star rating. If it's 3 stars, pretty damn important. But really, after a couple years of trading, you will learn what's important. You will learn what Wall Street freaks out about. It's pretty consistent, especially when index traders, S&P and NASDAQ. It's the same stuff. It's on repeat. Every month, it's the same thing that moves the market. CPI, PPI, GDP, jobs numbers, non-farms numbers and stuff, Fed decision. It's the same thing. It's never not the same thing. You'll catch on to the pattern after a couple years of doing this. It's always the same. So then you learn to get ahead of it. Getting ahead of it's a smart thing to do. Your job as a trader is not to guess correctly. Your job is to plan for both sides. What do I do if this happens? What do I do if this other thing happens? And then have a plan for both sides. But then take a guess as to which one you're going to bet on, and then hedge on the other side, right? And so the idea becomes, what's the correct approach? The correct approach is to bet, right? Ahead of time. And as you would know, now that you see, why were we selling off and rallying over the last month? Well, these are people that are thinking like Matt. Except Matt's telling you this now 3 days in advance. There's people that have been betting on the same thing months in advance. People buying that dip. Okay, we're going to get some rate cuts probably. Let me get in on the low. And that's Wall Street is aiming for this point in time a month in the past. And so as a trader, your job really is to try to formulate a game plan and a bias before the newbies do it. Everyone else that reacts to the news is the newbie trader. That's the exit liquidity for the smart people. You don't want to be that. You want to be the smart person. And so you want to try to figure out how to do this and think logically ahead of time. See, this isn't even like, I'm not even chewing on like mountains of numbers with you guys, like to like overwhelm you with stats and figures and trying to be so exact about it, right? Fundamentals, not exact science. Fundamental traders and people with newsletters and stuff will try to tell you that. They're always like, the sky's always about to fall because X stocks are trading 40 times over earnings. It's the highest it's ever been. Market crash is coming. Stupidity, right? You can't time the market with fundamentals. You never will. What you can do is take an educated guess on people's motivations. This is the real thing you're betting on. What motivates Powell to move his hand, to swing his magic wand around? It's the same data I can see. So when he reads the data, then he makes a decision. So let me get a step ahead of that. Can I guess the data before it comes out? Aha, CPI went up. Then there's a logistical sort of bottleneck as inventory gets depleted, and eventually CPI will come up. Okay, aha, I know CPI is coming up. Therefore, Powell might not cut rates. Oh, but his last comment was, they don't really care about it anymore. It's temporary. So he's not going to care if CPI goes up. Oh, good. So if CPI goes up and the newbie traders short that shit, I'm going to buy the dip. And now I'm the smart trader in the room, maybe. Again, I could be 100% wrong. But you see the mindset is, right? Is like, how do I get ahead of the dummies? And so you as a trader start thinking like, what's this person's motivation? Here's the data. Well, can I forecast the data before it comes out? And can I see the trend? The data is getting worse and worse and nothing's changed. So it's probably still on the same trend. Okay, let me act on that. Now on the random sell-off dip I get, I do want to be long in the Fed. Okay, the market just sold off today. Perfect. Let me grab it. And then you're like 3 or 4 steps ahead, right? Traders aren't just staring at charts, reacting to the candle noise. Good traders in the back of their head already think they know what's going to happen and they're betting on it as much as you can. And so as you guys are aspiring and growing as traders, start to explore things in this sort of fashion. It's not really, you're not out there with a degree in economics. You don't have to go out there and be so exact with it. You just need to draw simple relationships because the bulk of Wall Street is kind of stupid. It's low IQ, numbskulls throwing money at the market. These aren't PhD scientists out there in the pits when they used to be out there flashing hand signs at each other. These were just average people with a good grasp of the market. It's not professor of economics at freaking Cambridge up there trading, okay? So you don't have to be that either. You don't have to overwhelm yourself with the fundamental traders and newsletters trying to give you all these facts and details. You just need to have just enough to make an educated guess as best you can, A or B, up or down. What's the motivation of this guy? He gets the same data I do. He doesn't get a special CPI that I don't get to see. And can I forecast what leads into that? And you'll start to realize with most of these fundamentals, you can forecast 3 or 4 steps ahead. Here's an example. If I want to look at the logistics of when CPI is going to go up, I can actually look at, inventory data or sales data. There's reports for that too. I can see inventory turnovers and new orders, right? There's a factory orders sort of thing. When are companies buying more stuff? Well, if those are going up, it means it's an even faster path to CPI going up because people are burning through inventory faster. Ooh, now I'm an extra step ahead. Oh, wow. And you start to realize that you're not really out there doing something too beyond your IQ or too smart for your own good. You're actually being smart in the average trader that then put 5 extra minutes into thinking about it. And so that's really where you want to be, right? That's it. That's the answer. Oh, here's a form. Wait a minute. Flash form, limited slots. Somebody said, I'm so tired of this class, bro. I don't know if you're talking about me or you're talking about the chat, but I'm gonna tell you something. If you start thinking the way that I do, that's how you. If you learn to think like I do, that's how your dreams come true. In trading. I mean, just take it from me. I'm one of those people that's living the dream life as a trader. I would like to attribute a lot of that by thinking of people's motivations instead of looking at the charts and candles. I'm always trying to get ahead. That's true. Did you guys enter the contest? How'd you do? Did you guys enter? You get in the form? 10 50K scale accounts, giveaway 2 on 2. 10 50K. We've done 20 50K scale accounts today. That's awesome. See, you're welcome. You guys don't know, but when I started being on MyFundedTV, I asked him to constantly bless you guys with accounts. So I hope you guys tell your mods thank you, and you tell MyFundedTV thank you, because they're the best. MFFU is the best. I told these guys, I was like, y'all do giveaways. My viewers love that stuff. So we make sure that you guys are hooked up. MFFU is like, we love helping. We love being part of the community. Yeah, give the mods some love. These guys put up with a lot. Y'all annoy the crap out of everybody with your when's the giveaway, when's the contest. Y'all are so annoying and we love you. We do it because we love you. Our hearts are really big. So that's why we do it. You guys in the contest, did you enter? W for mods. There you go. That's right. I'll give the mods some love. They're the best. Okay. So anywho's, y'all, this is the big news week. Big to the point that any PPI, CPI, Michigan numbers that produce a dip is a dip to buy. So did you guys understand my lesson of thinking ahead? Very important as a trader is that you're doing that. If you're not doing that, the people that do that are the one that'll be winning the money over you. Doesn't mean I get the trade right by being ahead. It doesn't mean I'm right any more than you are. It just means I'm early. I'm earlier to the trade. Early, like, again, you guys remember the movie Margin Call when was it Jeremy Irons? He's like, there's only 3 ways to get ahead in this world, is to cheat. He's like, be smarter, be faster, or to cheat, right? He just goes, I'm not the smartest guy in the room, and I don't like to think that I am, and I definitely don't cheat, but I'm first, right? Trying to be first is the opportunity in any investment. You know what I'm saying? If you're buying something at the tail end of something, you're not going to make the bulk of the lion's share of the wealth. The wealth is always given to the person who does it first. You know, that's really where it comes down to. So aspire to try to make your decisions earlier than just news day. That's really just a lesson. I always promise you guys to give you a lesson every single time, like a professional level lesson. Entire hedge funds have like quantitative groups that sit there chewing on data all day just to give management the nerd talk. So the management's got the decision. They're like, we went over the facts and data and facts and data. The management's like, what's the probability that we get the rate cut or not? And they're like, well, current data estimates the probability is 60%. And they're like, okay, thank you. I'll make my investment decision on that. They're not wanting to hear all the numbers and facts, but they want to make that logical decision early as you can, right? And then quantitative analysts are the ones that put together this data. You know, forecasts are estimating that Walmart sales are going to be down 12% because of the tariffs, and we can check their inventory and check this and check that. And therefore, we assume that the stock price is going to devalue by 1% over the next quarter. And they're like, okay, so there's people that's entire jobs is to get the investor ahead of the price. And so that they're early. And you guys, hopefully, as a trader, you want to be first, as more first as possible. Because you guys, I'm going to tell you, I'm sure a lot of you guys are smart here. We're not, we're all dumb compared to the algorithms and the quants out there. We're dumb. All of us. Me too. We're all dumb. We're not smarter than Wall Street. We'll consider ourselves dumb. And we're not cheating, right? There's none of us are cheating here. So the only avenue you do have is try to be as first as possible. And in reality, this logical conclusion method that I teach this in the boot camp as well. Drawing a good logical conclusion, formulating a bias is really what you're doing, supported by your charts or whatever, is key. It's like the key that I have only pushed the short button 3 times in the last 4 months, right? 2 of them, or 4 times or something. 2 of them are last week. Why I've maintained long perspective, because I'm getting a step ahead of the news. I don't see anything that's going to spark Wall Street bearish anymore. I did, which is why I bought puts, but that's just in case I'm wrong, and I can easily be just as wrong as I am right. It's a guess, just like anyone else's guess. But the thing I'm not wrong about is being early on my guess. That is 100% the right thing to do. You are never wrong when you're early. There's nothing wrong about being more prepared. You just might be wrong on the trade, but you're never wrong when you're more prepared. That's actually the right thing to do. Well, that's it, man. That's a nugget for you guys to write down. You're never wrong if you're early. You're more efficient. You're better off. And you know that you're wrong faster than somebody that's late. If you bought the dip at the low and the market drops with the low and you stop out, that's a clean stop. If the market rallied on CPI and you jumped on the rally and then it crashed out, look how wrong you are. That's a big wrong. You were wrong small, but the person that's late was wrong big. And when you're wrong, when you're early to your trade or you're more efficient on your entry, you're always wrong small. That's one of my most famous sayings people quote me on, is that when you're more efficient on your entries, you're always wrong small. That's it. That's literally it. Res less than 0 and market's trying to rally. I know. A little detachment here. I know. It's like, what do I want to do, right? That is the question. I'm still thinking it wants to pull back and fill the gap, but I don't know. It might start moving. Let's see what NQ is doing. I grab a long here on NQ. So kind of sitting it open. Man, that's tricky. Yeah, with the negative res, gap fill possibility is there. I'm not shorting it. I never short on negative res though. On gap and goes like this. I usually just hold off if I don't feel super confident on it. All right. Tom said the long, wonder if he's in it. Just be wrong from the right place with extra. That's as Helpful said. That's just be wrong from the right place with extra steps. I love it. I love the Rick and Morty quote. It kind of is, right? Be wrong from the right place just with a few extra steps. Did everyone stop typing, or is it just your stream? Everybody stopped typing, Roman. You're the only person left in chat. It's so weird. I'm just kidding. Now just refresh. or scroll down. You probably not be like live on the scroll. Why did you use QQQ instead of NDX as levels? Right, because QQQ and SPY, there's a kind of a beautiful sort of relationship inside of those ETF instruments. Number one, they are tracking the index. Number two, they have their own independent supply and demand. The options are settled in the instrument itself, so they are assets, right, that people want to hold. NDX just being an index is not really an asset, right? The options are cash settled instruments. So the idea is that if you're long in NDX calls, right, and they expire in the money, you're just receiving a cash payment. If you're long QQQ calls, however, there's a high probability you will acquire QQQ shares, which applies pressure on the market. So when you are longing shares of something, you are participating in the market further than just the value of the options or the gain from the options, right? So there's a little bit extra volume, if you may. NDX doesn't technically have volume because there's no trading on it, but volume is everything. And so we're looking for evidence of volume to show supply and demand somewhere. So if I want to see if people are buying stocks, I've got stock volume indicators, right? We're trying to see if people are buying the index. Well, you can buy the options, but you're not buying SPX shares, right? So where can I see people that want to buy SPX shares as well? You can see it in SPY and QQQ, right? So the idea that those instruments actually allow people to, they circulate back on themselves. People buy the calls and they buy more shares, and the people sell the calls or hedging with shares. It keeps all of the sort of value enclosed in a box. If I bought SPX options that went in the money and I made $1 million, nobody in Wall Street knows if I'm going to take the $1 million and go buy shares with it or take the $1 million and pocket it. The fact that I convert those options to cash means I'm exiting as a participant, most likely. They're not converted to something. But in the options world for SPY and QQQ, people that have bought those instruments, the options, are very likely to end up with the shares themselves. Therefore, they're providing liquidity to the market. And therefore, it'll appear as extra volume, and it's actually a cleaner read. You can read the SPX and the NDX much better by reading SPY and QQQ. That's the idea of why I've always done it. I can make liquidity maps on SPX and NDX as well, which is very useful. But I've found that most of the liquidity is in these ETFs, right? And so the fact is that you're going to see volume spikes in the index or volume spikes in the shares. People that have acquired cash are going to buy something somewhere with it if they're participating in the market. So you want visibility on everything. They're either going to buy the index in a chunk through SPY, or they're going to buy a basket of stocks. Okay, I'm watching the stocks, I'm watching the SPY. And that usually gives you that final piece of the puzzle. You don't ever want to watch just NDX without watching QQQ and the basket of stocks inside of it. Resilience is the indicator for the basket of stocks inside of it. DD is an indicator for the basket of stocks itself as well. Liquidity map is the volume, and the liquidity map is the actual pressure of people buying the shares of that particular thing. So an example, in Q, this is QQQ's liquidity map because we're going to see the volume of people acquiring the QQQ. And it's going to mirror the volume of NASDAQ futures. If I were to load up a chart, you'll see volume spikes very similar in the same spot. There's a little bit, there's a volume spike here and here. It's very symmetrical. So you're going to notice that, people are going to buy and sell different products for the same motive. They want to be long the market. Well, let's find them. Let's look at everything at once. Yeah. Great question. I love that question. Always amazing to be here. Thank you, Nicholas. We love having you here, man. Keith Singleton, don't give up. Hey, Keith is going to be one of the finalists in our songwriting contest, by the way. He wrote a Whoosh fan song that was pretty catchy. So at least you got that going for you. Everyone loves your song in our songwriting contest. But I think you got it, man. Stick around. You got this. You have a good day at work, man. All right. So finally up here, I've got, holy crap, 1 minute left. Where did the time go? Keith wrote the second Whoosh fan song. We had one that was T6 and the one was Keith. Keith wrote like like a poppier, catchier version of it. They're both like top tier songs. So, all right. I'm going to be out of here in about 1 minute. If you guys have anything else for me, I'll be streaming live. I stream in the afternoon, so you guys are welcome to come by. I'll do some giveaways, as I always do in the afternoon. Some MyFundedFutures giveaways. Here's a link to my stream. If everybody, you guys can click that. Hold on, wait. That's the... No, wait, that's not it. Don't listen to that. That's the wrong link. That is my studio link. Let me give you a link to the show. You guys are more than welcome to come over and hang out on my channel for the afternoon as we finish up. This is the last that we have here at MyFunded TV. You don't have to go home, but you can't stay here because we're out of here. Thank you guys for coming out. This is the link to my stream. If you guys want to hang out for the rest of the afternoon, pretty much we all pile over there and just chill out, continue the day and do some trades. So I'll see you guys later. Adios, and thank you guys for being here. Also, congrats to the 20 winners of the 50K scale accounts, and keep telling your friends and retweeting us and helping us get the subs up to 50K. We love y'all. Thanks for tuning in. We'll see y'all later.
Yeah. Charts scribbled like hieroglyphs, secrets in the mist. Candlesticks whisper, every wick got a twist. Fibonacci spiral, price dance in a trance. Pyramids of profits if you catch the right glance.
Inner circle moves, shadows on the screen. Trading on the edge, chasing that dream. Cipher in the candles, fortune in the haze. The cipher in the riddle, money through the maze.
Liquidity hunts, snipers in the dark. Stop lost graves marked by the market shark. Order block sermons, preaching through the pain. Catch the ICT code, ride the profit train.